Okay, good afternoon everybody. A warm welcome to those attending and also to our viewers watching live on the Council's YouTube channel, Hillingdon, London. This is a meeting of the Audit Committee. My name is John Chesshire and I am the chair of this meeting. Details of the business to be considered today is shown on the agenda, copies of which are accessible on YouTube underneath the broadcast. In terms of housekeeping, we're not expecting a fire drill here this afternoon, so if the fire alarm goes off, please follow officers to the fire exits and out of the building to the designated meeting points. For those in the room, please switch any mobile devices to silent before the meeting starts, please. In terms of residents' feedback forms, for those watching via YouTube, if you're so minded, you can complete one of our residents' feedback forms. These can be found in the information section underneath the YouTube video. These meetings are intended to help us improve the way that we run our meetings. In terms of the attendees here this afternoon, we always sort of introduce everybody sort of one by one round the table. I've introduced myself, John Chesshire, Chair of the Audit Committee.
Councillor Henry Higgins.
Councillor Philip Cawthorne.
Councillor Tony Burrows.
Councillor June Nelson.
And we've just got colleagues arriving now, so just doing the introduction, so maybe Stephen, if you could introduce yourself.
Stephen Reid from EY, the appointed external auditor.
Thank you very much.
Mark Rutter, Senior Manager from EY for the external audit.
Thank you. Just getting things set up here. So we'll come round to the front then. Matthew, can you lead off for us?
Hello everyone, I'm Matthew Albridge, I'm the Council's Chief Operating Officer.
I'm Claire Baker, I'm Head of Internal Audit and Risk Assurance.
Richard Ennis, I'm the Corporate Director of Finance.
Alex Brown, Head of Counter Fraud.
Andrew McLeod, Chief Accountant.
Matt Davis, Interim Director of Strategic Operational Finance.
Tony Zayman, Chief Executive of the Council.
Thank you very much. I think we've got more people than microphones this afternoon, so that's a good thing, I think, to be honest. All right. Pardon? Oh, sorry, can we switch microphones off? All right, sorry, thanks, Mark. Okay, thank you very much indeed. We've got a busy agenda this afternoon, and I'm just trying to find the new updated agenda that I'm supposed to be reading from. We're going to go through in the usual order to begin with, and we've got everyone present, so we can stick to what we were going to. Ryan, are there any apologies for this afternoon?
No apologies, Chair.
Okay, agenda item 2. Are there any declarations of interest beyond the standard ones that have been previously declared? No, there are not. Which brings us to agenda item 3. Just to confirm that all items marked part 1 will be considered in public, and any items marked part 2 will be considered in private. All the agenda items today are part 1, so public matters for today. Agenda item 4, minutes of the meeting held on the 20th of November 2024. We were just saying it felt like yesterday earlier. I can't believe it's sort of nearly 3 months ago and before Christmas. So in terms of the minutes, page 1, page 2, page 3, 4, 5, 6, 7, 8, and that's about it. So minutes taken. Thank you very much for producing those, Ryan, for us. Okay, and I'll scroll back. Agenda item 5. We've swapped this around a little bit. So EY are going to kick off with agenda item 5. And I think that's going to be introduced firstly. Hiya, Councillor Dennis. Councillor Dennis has just arrived, just a couple of minutes late there. Andrew, did you want to introduce the EY report first. That's the way we used to run it. It would be introduced here and passed on to EY.
Can I take that?
Please, thank you.
Thank you. Just to remind people to begin with, 22-23 accounts were disclaimed. We have updated the set of accounts from that originally presented to this committee last year. Those accounts are also to be disclaimed. We're not alone in that position, as at the 28th of February, only 77 opinions on council or public sector audits had been issued out of 459 opted into the PSAA contracts. Only 1% of the prior year accounts were audited on time. This is a sector-wide issue as well as our own issue. We recognise we need to improve our capability and capacity to deal with preparing working papers. The runover from the 22-23 disclaimed accounts has had a knock-on effect on being able to deal with 23-24. We're bringing in SIPFA as part of the Finance Improvement Programme to actually address a number of those issues. I should also remind you that the complexity of local authority accounts continues to grow, and there are more and more requirements on external auditors to deal with more matters. Without full audit verification of the 22-23 accounts, it's made it difficult to provide in itself, because the opening balances aren't validated for 23-24 position. This is likely to roll forward into 24-25 accounts just because of the opening balances not being fully validated. So that's that. We've issued the new set of accounts. What we hadn't included when we issued them in June was the annual government statement. It hadn't been signed off by members or the leader at that point. It was an oversight on our part. We were aiming to have the accounts disclaimed and signed off by the 28th of February, which is the date that overrides are meant to be. That's going to push to the 13th of March simply because there's a statutory scrutiny period. I'd just like to say that the key adjustments that we have made, largely around valuations. There was an error by our valuers on the Ruislip Golf Course. We've corrected for that. Some of the school assets were difficult to value. We didn't have all the information available on area, etc. There's been a change to Hillingdon first fair value valuation. We've self-declared, because we found it, a 3 million debtors creditors issue which relates to DSG. That's adversely affected the DSG balance. Overall, the changes from the original set, earmarked reserves are around 2 million difference. There's a 7.5 million reduction in capital receipts reserve, 6 million upside, 2 million upside in capital grants. The capital receipts was 6 million up, earmarked reserves 7 million down, overall a 2 million difference. Going forward, we'll need to deal with the complexities of IFRS 16 and lease accounting coming in. We will need to revisit the basis of getting correct valuations and validating them. We know we need to look at the accruals, bad debt provision, and improve the quality of working papers to make external audits life that much easier so that they can do that. Chair, I think, unless you want to talk of a value for money report, that's the main dealing with the accounts.
Thank you very much, and over to EY then to share their views. And again, if we could have the mic off as well, I always forget as well.
Thank you, Chair. Let me say a few words and then I'll hand over to Mark in terms of the Council's, the audit results report for the Council. Before committee this evening is a provisional audit results report for the 23-24 financial year that seeks to summarise the results of the external audit, and management have done a good job in summarising a number of elements. Our audit is complete. I think it's fair to say that it has been a challenging process, as we've reflected within the report, for a number of reasons, principally linked to clearly building on the 22-23 position, but more substantially linked to the turnover in officers that the authorities experienced, capacity and capability within the finance team linked to that, and then the systems and some of the systems and quality of information and data. Nonetheless, relationships remain good and positive, and I want to place on record my thank you to the finance team for supporting us in discharging our responsibilities. We do intend to issue a disclaimer of opinion on the 23-24 financial statements, linked, as has been indicated, to the disclaimer on the 22-23 financial statements, but also members will see within Appendix 1 within the report we've set out those areas that we have been unable to complete as part of the 23-24 audit because of the reasons that I've outlined, and in agreement with management prioritised those areas which would help build back the assurance. As has been said, the Council failed to run a compliant inspection period, and therefore the inspection period had to be rerun. That expires in March, so we will look to complete our reporting and issue our opinion on the financial statements in March, but that does mean the Council will not have met the legislative backstop date of the 28th of February. In relation to value for money, we identified a couple of significant risks, and as a result of our work we've identified two significant weaknesses, one in relation to financial reporting, building on a number of the areas that I've already mentioned, and secondly financial sustainability. Those again will feature in our audit report. But with those comments, let me pass to Mark.
So just to expand on Stephen's description of kind of the status of the audit, so as we were working through the audit work on the 23-24 audit, kind of working with officers, it became apparent as we were moving through that we weren't going to be able to complete all of the planned procedures by the backstop date. Prioritisation exercise then went through focusing on those balances which will be of most benefit in rebuilding the assurances and removing future kind of modifications to the audit report, which essentially means the balance sheet and where we can reserve, so particularly HRA, so we can separate the HRA reserves out from the general fund with confidence. So that's the backstop to the work, and that's what you'll see reflected in the appendix, as the balance sheet tends to have a better RAG rating than the income statement in there. I won't run through the appendix in detail, but I'm happy to take questions on it. But we also set out within the report those areas that are our audit risks. So when we brought the audit plan to the committee, we set out our audit risks for the audit, as you would expect in a normal audit year. We have progressed the work as best we could against those risks, so there are some areas that we haven't been able to finalise. So I'll just pick out the kind of key observations and what we have been able to do, because I think it's really useful for the committee to understand, yes, there is a disclaimed opinion here, but there is some assurance that has been obtained. It has limits, but understanding both what assurance has been obtained and those limits is really helpful. So one of the risks we have is management override of controls, which we badge up in our reports as misstatements due to fraud and error. That's a standard risk that all audit engagements are required to have. Linked to that, there's a risk we recognise around inappropriate capitalisation of revenue expenditure, and in particular we focus our testing on REFCUS, revenue expenditure funded from capital under statute. We have been able to do that testing both for the current year, but also we went back and tested REFCUS from 22-23. We have nothing to report from that, so that helps us with addressing that sort of risk. The valuation of land and buildings has been a key focus through the audit. So the council has, you could see it as helpful, you could see it as unhelpful, but the cycle that a local authority would normally go through is to revalue its land and buildings every 5 years. In most authorities, that's a fairly even churn through the 5 years. Hillingdon is not in that position. They had a very big peak this year with about 80% of the assets going through revaluation. That meant more work to work through this year, but it also meant in completing it, actually, we've got a much bigger proportion of the asset base covered by the assurances we've now rebuilt. So we've been able to complete that work. The report pulls out a couple of findings, the biggest one being Royston Golf Course, which was covered off initially in a couple of the smaller ones that our report covers there. We've also, as part of our work on PPE, looked at the movements in PPE during 22-23 that were not ordered as part of the 22-23 audit, the additions, disposals, etc. So again, we're in a good position going into 24-25 on land and buildings and asset valuations, which will be a key area of the focus of the audit going forward. We touch upon infrastructure assets, pension liabilities. I don't have a great deal to say on those. Likewise, the valuation of council dwellings. And we had hoped to do some work as part of the audit around the preparations for IFRS 16, which was mentioned there, the new leasing standard. As the report sets out, actually we didn't think the council was in position for us to really do that. They weren't as far progressed as we expect. The council has continued to work on those steps, and you're now not very far away from needing to implement that standard into 24-25 accounts, but of course remember they started last April in terms of the period, so really you're into the period when the new standard applies, and that will be an area of focus on our next audit. I'm going to jump through the value for money and we'll cycle back onto that at the end. The report just pulls out a couple of audit differences identified through the audit. I'm not going to run through each one in detail, but I did just want to comment on the other observations in the report. So normally when we are doing our audit work, it's not uncommon that you will find a sample item that fails or what have you. We would extrapolate it. If the value is low, we tend to report it to the committee and management. If the value is high, we will do further work. Due to the constraints of the backstop date and the kind of agreement we had with the officers around where we would focus prioritisation, we did have some findings that were giving us some fairly chunky extrapolations. I want to be clear to the committee that is not us saying that is the size of the error. That is the best guess based on the limited testing we have done. We would normally do more testing to refine that estimate, but we haven't been able to complete those procedures. I do have an update on the matter we raised around the £9 million adjustment to borrowings. Officers have provided some additional explanations to us since this meeting. We will, however, look at that in detail as part of the 24-25 audit. So it's been provided, but we have not formed a view on whether or not it addresses the questions that we asked. Our report sets out some control recommendations that we've raised. So these are matters that we picked up in performing our audit procedures. Obviously, there is a bigger recommendation sit on top of that as part of the value for money that I'll come back to. So I'm happy to pause there, take any questions, and then I will come on to just say a few words about the value for money, because I think that's a slightly different topic.
Thank you very much indeed. I've kind of read the report as a whole, so I'm happy to kind of leave questions until the end, but if colleagues have got anything that want to come in on at this point. Councillor Nelson?
It's just some clarity. I'm not a financial person, but it's just what I read, and I just wanted to have some clarity on it. You said there was a committee, page 25. Page 25, yes? Yeah, page 25. A cumulative deficit of 50 million is shown in the account, and on the retaining element of this is a school budget at the 31st of March. 2024, and this has impacted in a deficit for the safety valve. Can you explain to me where we're at with that, and what would be the impact now that the backstop has been released in a sort of way?
So I think there's probably some questions there that officers might be better placed to answer in terms of safety valve, but in terms of the backstop, just to be clear, the backstop legislation is around the timing of when the an audit will be drawn to a close. Effectively, it gives a basis for us as auditors to say, we're not able to complete our procedures by this date, therefore we're going to move to a modification of the opinion as our report sets out. The school's deficit is a separate issue that the council will need to work with on that. There is a statutory override in place for the council at the moment, which effectively allows it to treat the deficit on its schools as an unusable reserve. It sort of parks it away from the reserves that you look at when, for example, setting council tax. That statutory override comes to an end in, I think it's 25-26. No one knows quite what will be the expectations of government when that comes to an end, therefore it is an uncertainty that the council is following. What we highlight within the report is that at the moment that deficit has now grown to larger than the usable reserves of the council. So if government, as they would have a right to do, I'm not suggesting that this is their intention, would turn around and say local authorities now just need to cover that deficit, effectively you cannot. You do not have the reserves to do so. That's the key point I would draw out on that. I don't know if that fully answers the question, but officers might be able to talk a bit more about the safety valve mechanism that's referenced.
Thank you, please.
Thank you, Chair. The issue of negative DSG balances, dedicated schools grants, is effectively where councils have spent more on supporting children than the grant that's come in. Ordinarily, if we're a private sector company, that would impact on our profit and loss and level of reserves to issue dividends, etc. When I last looked, 91 councils had negative DSG balances because of largely high needs. Only 40 had positive balances when I looked at the RO returns. This is a national issue. The government recognise the national issue and the pressures facing local authorities and have allowed those negative balances not to impact on our ability to fund the rest of the council. That statutory override ceases in a year's time, but we expect it will be extended and a national solution to the issue come forward. Government have introduced a safety valve system where they've allowed some councils to lower their deficits by effectively being given a grant of government money to help. They do that on the basis that the councils are implementing their own proposals to get back to a neutral position and bring their own balance down. Government have queried some of our activity and want further information, so they gave us a safety valve grant. What they've done is paused that pending further information. We expect it to come back at some point in the future, although we're not guaranteed it.
Thank you very much. Richard?
Yeah, I'm just, and Matt is one of the sort of new people we brought in to try and bring some of that experience and expertise around what we're trying to do. Really, I mean, it is a national issue. A number of authorities would, were they to have to write out that negative reserve, which is a concept I struggle with, I have to say. That we would in essence have be technically in that territory of needing exceptional financial support, but we would be amongst the whole load. It's worth saying that the Office for Budget Responsibility recognise and have said this needs a national solution. There is another angle to look at it in that local authorities, and I have to be careful how I say this because I'm both facing politicians from a previous government and indeed a current one, but there is an issue about the funding provided to local authorities for special educational needs has not been sufficient. And the local authorities have been left to pick up the responsibility without the funding to meet it, really. So I do think we have to recognise that fact as well. The other point I want to make is that Abby Preston, who is the Director of Education, and the team that work with her have been working incredibly hard to deal with the deficit and to try and get that stabilisation position. The suspension of the safety valve agreement is not helpful to us, and we are in conversations with DfE, Department for Education, to get that removed because it is hurting us in funding, cash terms, interest terms. It feels like a punitive measure in an area where we're doing well. It is good to say that in the last meeting with the DfE that the education team had was a positive meeting, and we are advice is going up to the Secretary of State, to the Minister, to see whether the safety valve can be reinstated for us. Really, I think that would be a helpful position, but I think you've got to recognise national problem as well as we have our own problem, and nobody's going to solve it for us. I'm not, other than perhaps central government with a national response on it. But hopefully we will get that safety valve suspension lifted, and I think over the autumn we'll probably find out what government, and winter we'll find out where government's going to go with this. But this is it's a big national issue as well as one for ourselves to be concerned about.
Thank you for that input, Richard. Councillor Higgins.
Richard, sorry to ask a further question on that. Two things really. How much money did we receive when we started the safety valve agreement, and will it be backdated?
So so I'm going to have a go and try and remember all the numbers that we were getting, and my colleague will probably come in and tell me if I get them wrong. But our expectation, if I can do the easy one first, our expectation is it will be backdated. The conversations, and fortunately we've got the Chief Executive here, who would have been here and not me at the time of the conversations. My understanding is that they certainly haven't withdrawn. They haven't stopped payments with an intention not to backdate. When they do so, but I've always got a concern that until you've got the cash in your hands, there's no certainty around it. I'm going to let my colleagues come in with the amount of money we're owed at the moment. I've got a feeling it's somewhere in the region of about 15 million, but I'll let the colleagues confirm. And if they don't know it, we'll come back and put it on the minutes of the committee when we do so. We're also, as part of the deal, it's worth saying, putting in money from the council's perspective as part of that deal. So you will have seen in previous budget programmes that we are putting in, I think it's 4 million a year. We've got 3 lots of 4 to go in, and another 4 going into the budget for 25-26 out of capitalisation receipts that we will use, subject to MHCLG's agreement to use the 4 millions capitalisation. It's not a DFE decision. MHCLG have made that quite clear as well, so we've still got to get that capitalisation decision. I think they'll get there, because why wouldn't they? They'll want the 16 million that's there, so I suspect it will be a straightforward process when they do. That's got to be part of the deal. We've put it in the numbers, we're committed to do so, but we need to ensure that the department are also taking us off the suspension in that position as well, really. As I say, that's hopefully we'll get the news fairly soon that we'll come off that, but I'll get my colleagues to confirm the number. If they don't know, we'll come back to the committee.
Okay, thank you very much. Any extra clarification? No. Councillor Higgins, did you have another question?
Yeah, I did. So we're continuing to pay the 4 at the moment. We're not paying any more than that? Or?
We haven't paid it yet. We've set it...
we have paid some 4s, though.
The 4s we've set aside in the budget, and we've put it on the balance sheet ready to pay, but we haven't paid the cash over it. If we're not going to get the cash from DFE side, then I'm not going to get the cash from our side either.
But is that reflected in where? I mean, obviously we've kept it separate. We're still keeping that separate, so it's not affecting our everyday. So it's not put it this way, it's not straining on our other services for that.
No, that's correct. Yeah.
Okay, thank you.
Councillor Cortham.
Thank you. I'm a relative newcomer to this committee. My tenure will be short. Therefore, if I display some ignorance along the way, then I trust colleagues will indulge me for a moment. But I always find the English language a wonderful thing when I'm reading reports like this. And when we hear about disclaimers of opinion being issued, when we hear about backdrops that are required by legislation not being met, how big an issue is that generally in local government? How concerned should we be that we're in that situation here? And have you seen enough from the work you've done so far to be assured that we're on the right track to getting back to where we be, or are you going to be guarded about your assessment on that as well? Thank you.
So in terms of how big an issue it is in the sector, I guess if you go back a year or so, very big, as the numbers were set out around 9% or what have you, authorities meeting the deadline. However, the vast majority we do expect to hit the 28th of February back. I think that was a technical issue in terms of the inspection period in the annual governance statement. The bigger concern, which I think is specific to Hillingdon, and there are other authorities out there, but it's not of the same scale in the sector, is the ability to produce the accounts and support that audit process to the timescales will be required going forward, and that is pulled out in one of the VFM weaknesses. So we are concerned about that, and that is an area that the council needs to look at going forward, and officers have kind of already acknowledged and started to work on.
Thank you very much, and we'll come on to that in just a minute. I might as well pitch in with a question then at this point. At our last meeting, we've just looked at the minutes of the last meeting. 20th of November, less than 3 months ago. We heard that the audit was ongoing and expected to be completed by the backstop date. did the audit complete, and was it purely this administrative oversight that has resulted in us sort of missing the backstop date?
In terms of did the audit complete, I mean, in terms of issuing an opinion, obviously no, the backstop date is going to be missed on that. The actual work, if the committee members, I haven't got the minutes in hand to see exactly what it's called, but I remember saying at that meeting that we were doing a prioritisation piece because we were not going to get through all of the expected work. So in that regard, no, the audit didn't complete because we weren't able to get through all of the work that we would have wanted to get through. We did put some extra resource onto the audit in December to try and maximise the amount of areas we're able to conclude, but the Appendix A to our report sets out those areas we have and haven't, and I think the committee will reflect there is more amber and red in there than we would have wanted.
Thank you very much for clarifying that for me. Do we want to move on to the value for money bit for now then, and we'll pick up any other questions as part of that. Thank you.
So Stephen's already covered off the high-level thing, so I'll just recap and give a bit more flavour as to the observations we had that are leading to our conclusions on this. So as the report sets out, we've identified two risks of significant weakness. So the way we approach the value for money work is we do a risk assessment out of which we can identify risks that a significant weakness might exist. We then will decide whether either at that point we can conclude that a weakness does exist or further work is required to determine whether a weakness exists. In this case, we've concluded for both of our risks that significant weaknesses do exist in the Council's arrangements. So the first one that we set out in the report is financial sustainability. So the committee will be well familiar with the financial position of the Council and has had reports on that. The conclusions of our value for money, it's not necessarily the black and white, the position of the Council, just to be clear, it's around the way the Council is managing that position, and that is what we look at when we look at arrangements. And we set out a couple of key factors in here that have led us to our conclusion that for the 23-24 financial year, there was a weakness in those arrangements. The biggest ones for us being the Council did report a balanced budget for 23-24, but only after two large accounting adjustments, one of which was effectively a transfer out of earmarked reserves, so actually it still reduced the usable reserves of the Council as a whole. And such adjustments are unlikely to be available year after year to the Council, sort of thing. There is also the growing schools deficit, which has been talked about, and the fact that now exceeds the available reserves of the Council to cover. And then looking ahead to 24-25 and the overspends that the Council is reporting in 24-25, whilst that is obviously the following year's activities, the size of the overspend says to us it was the forecasting that was performed during 23-24 in setting the 24-25 budget approved sort of end of February in the year that we're auditing. What was the forecasting robust there and taking into account all of the risks? So when we put all of those factors together, we've concluded that there is a significant weakness there, and we make some recommendations within the report to address that. The second area that we've pulled out largely drops out of the difficulties we've encountered in performing the audit, and sort of that is a key evidence base for us, if you like, though we recognise that there has also been a level of churn within the finance team, and capacity there has been a factor as well. We did also note internal audit in their annual opinion pulling out kind of the quality of data within the authority as a significant factor, and we see overlaps there because some of the difficulties encountered in performing our audit procedures is to do with the quality of data, but that data is also used for internal decision making within the Council and in other governance processes, so it's not just an account and audit issue. And that's why we positioned that weakness as around the quality of data, not just the accounts production sort of thing. So those are our two weaknesses. They will be reflected in the audit report. We do have a slide at the end of our detailed commentary which sets out some of the actions that officers have taken in response since the end of the financial year, and of course there has been, Richard came in after the period that we're reporting on here and introduced some changes. We will cover that in future commentaries, but this commentary is necessarily backwards looking to the 31st of March 2024, and therefore that's the focus of it.
Thank you very much indeed. If I can just ask a question to begin with, do you believe that the quality of the data has declined dramatically from the previous year to 23-24, or is it more of a gradual decline?
I think it's probably more of a gradual one, but rather than a sharp drop in the quality of the data. I think it's more about the ability to update that data and bring it up to date. Assumptions supporting financial statements should be reviewed each year, and it's an increasing reliance on data that is getting older and older, rather than it being that data was suddenly great last year and isn't this year.
Thank you. Higgins.
But shouldn't that be something that the external audit should have raised back then? Is it something, sorry, maybe I'm not making sense. If it's something that's been declining, and you've been our external auditor for many years, isn't it something that you should have, did you raise that flag? Obviously I've only been on this for a year, so forgive me. Was that raised then, that there is still the Titanic, I would like to not use it as a Titanic, but a vessel going to something that we should be saying, hang on a minute, we can see a big pointy thing out of the water.
Forgive me if I've also only been on it less than a year. Actually, I only joined it sort of October, November time last year.
I don't think so, is the quick answer.
Yes, but previous reports do have control recommendations in them that probably get at more specific examples rather than that overall stand-back picture.
Yeah, and I think if you reflect on the sign-off date for the 21-22 audit, which again was before my time, that was significantly delayed, which contributed to the need to disclaim the 22-23 audit because there wasn't enough time left to do that. And I'm sure within our 21-22 report, and indicative in the delays in being able to complete that audit were issues around the quality of the data.
To you, Chairman, it does say, I mean, in your page 346 about, the quality of the data is poor. I think I'm just putting it lightly. So, how far are we back away from getting it to be good? Is it a big jump or is it a small jump? I know it's a question. Yeah, maybe.
I think it is a question for officers, and maybe it's wrapped up into just another question, if I may, Richard, to piggyback off that. Obviously, we've seen the VFM section of the report. We've got several questions, I'm sure, about it. But kind of what's the response been from officers since getting the report from EY, admittedly at the end of last week? What's the next steps on this front for you?
So, we've received it and recognise we've got a period of time now to reflect on the report and get a management response together. Really, some of that involves making sure we've got people who we're here from that period of time. Really, we'll coordinate the response back. I think it's important that we do accept and recognise the challenges that the report raises with us. I think it's we have to realise there are issues that we need to resolve and work positively to resolve them. Part of that is what the bringing in the Chartered Institute of Public Financial Accountants team will help us do, really. So it will focus on a number of areas, primarily to bring us up to the standard that you would expect. So Chartered Institute of Public Financial Accountants, CIPFA, I will refer to them from now on, having said it twice. CIPFA have a financial management code, and we need to measure ourselves against it on where we're at, and we then need to have a plan of action that brings us up to standard. So standard gap analysis stuff that organisations do across a range of things. So it's incredibly important that we come up with the improvement programme. That plan of action, I've talked to both our own management team through Tony Zaman and as Chief Executive to make sure the corporate management team know what we're doing. I've talked to the Leader of the Council and the Cabinet to make sure that they are fully supportive. Indeed, the Finance Transformation Cabinet member, indeed, is part of the request to get this in place as well. So not only at the receiving end of it, they will look across a number of areas for us, really, and that will include bringing our governance arrangements up to standard. It will include looking at the balance sheet to make sure that there aren't things lurking in it. We need to know if there's any issues still to resolve. We need to know if there's any potential good news in the balance sheet. Murphy's Law suggests that one of those may go than the other, but you never know. But we need to know we have that stable footing for ourselves, really, because that's really important for me. There is something about the budget as well, and getting the solid foundations around our budget. We have had an Oracle implementation that didn't go as well as would have been hoped, and that needs to be resolved as well. So part of that financial information program. And bringing in SITFA will give us some, not only capacity, it will give us some capability, expertise in some key areas as well, really. Because what I don't want to do, as I said, is leave the financial, accounting, the balance sheet and the accounts in a position where we don't resolve the issues, because we need to resolve them, because that is what gives the assurance that the council need and the residents need in terms of how we're running this business. But it is about bringing us up to that SITFA financial management code standard. That's quite clear. This is what authorities do when they find they have issues. So we are following a path that others have done as well, and that's been started in terms of getting the recognition, and we will land the SITFA team here pretty soon as well.
Thank you, John. I'm sorry, Matthew. My brother is Matthew, so she's got that right.
Thank you, Chair. Could I just add that, like a number of people here, I've only worked for the organisation for 3 months, but I've actually seen a step change in the organisation in addressing these issues, even before this report was published. I think your question was, what has the officers done since? So I think we recognise and had recognised those with leadership from Tony and Richard. Grant Thornton, zero-based budget approach, the Star Chamber. We've taken out several £1 million worth of previous savings that weren't validated or robust enough. We've introduced a financial improvement plan, the Oracle Improvement Board. We've brought in extra capacity and capability and expertise. So it's not just that we've reacted since the report was published. It's been a journey.
No, thank you very much, and we do appreciate the report covers the period up to the end of March last year. I'm certain that a lot has happened since, and I'm certain that a lot more still needs to happen to get things on a more even keel. So I'll go to Richard first, and then I saw. Look, we recognise the budget report which we took to December Cabinet was quite clear, and it showed the scale of the challenge that we've got in 25-26. So we've got north of 30 million of savings to deliver. That's a big number. It's bigger than we've ever delivered before. Again, quite a recognition of that in scale alone is important for us. So making sure we do the work to deliver that. Some things have gone against us since. Inflation, when we're putting our numbers to bed, was CPI sitting at 1.7%. If you look at the BOE forecast now, they're in the 3.5-3.7% for all 4 quarters going ahead, and then another couple of years before it goes sort of back down. So things have a lot of this was some of that reaction to what's going on both internationally but also nationally through following the budget and so on. That gives us more pressures to deal with as an organisation. That shift in inflation from the 1.7 to where the BOE forecasts are on a full year basis puts another 6 million problem in our wake to actually try and deal with. That's a big number for us. We have put aside, and our reserves are relatively low for us to deal with it. Really, we have put some money in the budget to deal with some of the challenges. We've set that out in the budget paper as well. But it doesn't take many things to go wrong before that contingency. But it's right that we have a contingency. That is different. That is a lot more than we had in the last budget. But the challenge, the big challenge is 25-26 in particular. If we get a good year, and I think we need to not only we need to deliver the vast majority of those savings, but actually we need a bit of luck, and we need some of these inflation issues not to come and
get us, because that's our most challenging year, is 25-26.
Thank you for that, and we'll hear a little bit more about sort of efficiency savings and transformation in a while. I'm going to go to colleagues on the committee for any questions. Councillor Burles, first of all.
Thank you, Chairman. Just going back to the valuations issues, I've been on the committee a couple of years, and it seems to be a problem every year. And it's obviously more of a problem this year with all the valuations changing. Can you explain it? Does this happen in other authorities that you deal with, or are we just unique?
So again, unfortunately, I can't comment on previous years, but in terms of this year, I think the challenge there has been the assurance over the external valuations. As you know, the council engages an external valuer because it doesn't have the specialisms to value some of these assets. It can be quite complex in that. But there is a level of checks to be performed on that, and Royslip is a good example. Sort of, that I think it was about 3 million last year and came in at 18 million this year and ended up in the accounts at that, and sort of the stand back is, a check that sort of asks, well, why has it gone up sixfold in value? So there's a control recommendation in our report around that. And then I think the other points probably in terms of valuation difficulties tie back into the data quality point. So, your valuations are often based on floor areas or that sort of thing, and if you haven't got the records available for audit behind that of what they are, and there's an example of that as well that we pull out in the report, then it becomes very difficult to substantiate those valuations, even if they are actually correct. It's about demonstrating that they're correct. Does that answer the question?
It does, yeah, but just wonder, is it common in other authorities to have the same argument? It seems to be the same argument year after year.
Yeah, the valuation of property, plant and equipment is inherently a very judgmental area, and there's no correct answer for the value of a building. It's an estimate provided by an expert, and one expert will come up with this number, another expert will come up with this number. As the auditor, what we seek to do is to develop a range, so every piece of property, plant and equipment that we're testing from a valuation perspective, and if the council's value falls within that range, then we find that acceptable. Now, across local government, as I say, it's a very subjective area, and there's not an audit that I know of where there hasn't been debate and discussion around what the appropriate value is, and indeed disagreements between auditors and management and their advisors in relation to what the appropriate valuation is. But I think, as Mark said, there is an important underpinning piece here, which is data quality.
And just to add to that as well, it's important to keep the context here. So the example of Royslip was a big number. That was a borderline material one on its own. But take that out, there's a couple of smaller findings in there, but actually nothing too contentious in the PP valuation. So I don't want to sit here and give the committee an impression that we've got fundamental issues with the valuations that the council are coming up with. So there's one or two examples in there of processes that could be tightened up, but by and large, the council is getting its valuations in the right ballpark. As Stephen says, it is a ballpark, it's a judgment. And I would suggest that the majority of local authorities we work with are in a similar position. They will have one or two assets that will trip them up most years, but the majority of kind of there with a bit of tightening of controls maybe to look at. So I think the council's in line.
Okay, thank you. Just one other question.
Sorry, I think we've got one follow-on.
Yeah,
okay.
Just say, on the valuations point, there are a number of things which I think we need to focus attention and resolve. That's one, but it wouldn't, there are other more important things really. And just by way of example, I've certainly from my Homes England time, there are assets bought for north of £200,000. So it's specific risk and market risk you need to look at as well, because market risk can change the value of an asset, quite markedly. So there are land assets that were worth north of £200 million in 2008 when the big economic crash occurred. They were worth near 12 to 15. So market risk is as important as specific risk, and certainly in some of the assets that we hold as well.
Thank you, Richard. Matthew, Andrew, did you want to say?
Yeah, just on the point of valuations. The last year or two we've tried to do a lot of work digging around to get better information on terms of floor plans and site plans. we've also, as Mark touched on earlier, sort of moved towards valuing 80% of our land and buildings on an annual basis. So the large chunk of our property, plant and equipment, circa £2 billion, is being valued each year now rather than waiting every 5 years. So I think that's strengthening the reliability of our information on that. And we're also taking on board EY's recommendation to move to valuing school assets on a modern equivalent asset basis, which I think will improve things on schools valuations going forward and instruct our valuers to change their approach on that.
Thank you very much indeed. There was a follow-on question, Councillor Bowles.
It's a new question. I'm not an accountant, so please, like some of the others, forgive me for asking. But looking on our investment strategy, we've got this Hillingdon First Limited, and we've got money involved in that. And it says in here, it's not considered of sufficient maternity require inclusion for group accounting purposes. Could you explain why?
So firstly, I would say that is a judgment that the council makes in terms of that. The judgment is around the numbers that are in that body that would come into the group account. So if you did group account, you'd effectively add the numbers of that body to the numbers of the council. So its income and expenditure would be added. You do a process to eliminate transactions between the two, so that you're not grossing up. Essentially, it's below the size at which our materiality threshold is set. So by the council choosing not to consolidate it as auditors, we don't think it's a material omission from the financial statements. Whether or not it could be consolidated on a low amount is a judgment call for kind of the council to make.
Thank you very much. Councillor Higgins.
I'll try and be quick. Richard, with your fantastic knowledge of other councils, when you get CIFA in, how long does it usually take for them to get them up to date?
So they to get them here, they'll arrive pretty soon. So I will sign a contract fairly quickly to get them in. I expect to sign the contract this week to land people. What I want to talk to them then about, they'll do an initial diagnostic piece of work where they'll talk to some key officers. I also want them to talk to some of the key members as well as part of that. I've said to them what I want them to do. I want to spend some time on the diagnostic, but I don't want people to come in who are just going to tell us what to do. The primary bit of this contract is about the doing part of it. I know what we need to do, but I do want them to validate some of that. So I have steered them into here are the things that I would want you to be in the doing phase of it. So we'll go diagnostic first. That will take a short period. They think about 20 days to get the diagnostic done, and then we need to get really quickly into the resolving the problems, in getting things better in the balance sheet and getting things better in sort of budget process, getting things better in governance. So we want them to do it. My view, on timescale, there's been money put into the sort of transformation budget, which is where we use some of the capital receipts to transform the company. I've got a small amount of that subject to cabinet approval or recommending to full council and subject to full council going forward. I put money in for the 2 years because it could take a period of time. You don't turn these things back on to get them to standard in an instant. We are an organisation with a lot of history that we need to recognise, both the positive and the negative, but we need to get ourselves back to the right place. We will prioritise it and make sure we're hitting the things that matter most, both for the organisation and to get things in the right space. So there will be a prioritisation, but I want to do it short than that. The point is I don't quite know until they land the diagnostic and then say here's what we want to do. But we put 2 years of money subject to cabinet recommendation and obviously full council. It's not for me to fetter the decision that's made there.
Councillor Higgins.
The other thing is the band. Do we know what your band is, or is that something you keep to your self-evaluation? Because obviously, if it's better for us if it's a higher valuation. And the second question is where does depreciation value come into some of the plant materials and stuff like that? How is that then valued? Because obviously that should go down, whereas land assets would go up, we would hope.
Yeah, so a couple of things there. One, I'll just cover off a technical accounting point just for the benefit of members. So land isn't depreciated. because land will always be there. It doesn't kind of wear away in the same way a building does. In terms of the valuation range, no, we don't tend to disclose that too. So what we will do is, and we only use our valuers to look at a sample of what we would consider the highest risk assets. You do not ask them to look at every asset that we test the valuation of. Is they will come up with a range and they will let us know if it's in the range. If it's not in the range, we will report to you effectively the difference between the end of our range and where your number sits. So if our range is 10 to 15 million, you're at 18 million, we'll probably tell you we think it's 3 million misstated or outside of a reasonable range, sort of thing. So by exception, if we're not reporting on it, they're all in our range, if that makes sense.
Thank you, John.
Thank you very much indeed. Matthew.
Councillor Higgins, just a clarification. There is a quirk in local government accounting that depreciation is reversed out. So depreciation has no impact on the council's bottom line general reserves. There is MRP, minimum revenue provision, that's charged on outstanding capital debt. But for clarification, depreciation is reversed out.
Okay, thank you very much, everybody. A few final kind of thoughts on this from me. I kind of appreciated the report. I thought it was very clearly written and very understandable. So well written, well crafted. Mark, you've done a great job there. The messages, though, are very hard messages, and obviously I'm disappointed. I'm sort of partly shocked, but disappointed, really. Disappointed that we messed up a little bit in terms of the government statement and not doing our bit on time. But that's a small thing in the scheme of things. If any alarm bells needed to be rung about the state of the finances here, this report makes it very, very clear indeed. I appreciate it was up to a point in time. I'm sure that things haven't got any easier since then, and I know that a lot of hard work is being done to try to get us into a better position. I'm heartened to hear about the SITFA review. I've been on the receiving end of one of those many years ago now, and I found it very helpful, very useful exercise to carry out. Within your report, you suggest that the kind of solution to some of these problems are more efficiency savings, potentially raising council tax, potentially raising fees. I don't think the authority is in a position to shy away from making some tough decisions in any of those areas, and I know it's been making some decisions in those areas. Thank you for the hard work. Thank you, officers, too, for the hard work. I'm alarmed. I think the Audit Committee, in its role, should be alarmed and will be looking to have regular updates on the situation. And, you know, we need to put the authority onto a more sustainable footing, both in terms of the money and the data that informs decisions about money and everything else. So, thank you very much indeed. Hard message, but well communicated. Thank you. Right, we'll move on.
Sorry, Chair, you're going to take the pensions?
I'm sort of a bit lost. I normally have a printed out agenda, and I haven't got one, so I've got like 3 versions of my comments on things. I've taken a picture of the agenda on my phone. I've got string locks going off left, right and centre. I'd love to hear about pensions, please. Sorry, Ruth.
Just to say, Chair, that is saving us money. If you can carry on in that disorganised state, that would be helpful.
Sorry, Ruth. Over to you, I guess. Talk us through.
Yeah, so if I go through the executive summary, which is on page 175 of the packs. So we presented our audit plan at the April Audit Committee, which covered this audit scope and approach. And we've carried out the audit in accordance with that plan, with one difference, which is the updating of materiality based on the year-end accounts, which raised materiality slightly. In terms of the status of the audit is substantially complete. There are some procedures that run up to the date of signing, which will be mid-March, but all the groundwork is done. We have identified three larger differences. The first one is in relation to updating of investment asset valuations of 4.1 million, and that's where you have more up-to-date fund manager reports that come after the production of the financial statements. That's something that happens every year. It's a standard timing difference. The second one was around the recording of investment income from one particular fund manager, and management didn't identify the error in relation to that. It didn't match the fund manager valuation. The error did actually occur in the prior year as well, so we felt that was something management should have picked up, given that it had been an error in the prior year. The third one was around a new investment with Blackstone, which was incorrectly disclosed as level 2, but should have been level 3 due to the unobservable inputs. There were some other minor disclosure issues as well, which have been corrected. In the audit plan, we did set out our key areas of focus, and those are set out on the table below. The first one was some statements due to fraud or error. And in relation to that, we did pick up the error we mentioned on investment income. Valuation of level 3 investments was a significant risk, and we just picked up the movement of 4 million in relation to the timing difference that I've just mentioned. The final one, significant risk, was on classification of level 2 and level 3 investments, and here again we picked up the Blackstone investment being incorrectly classified. There were also, in relation to IAS 26, some minor differences between the actuary's report and the statement of accounts, which have been corrected. In terms of control observations, we picked up really that management really should have identified the investment error, income error, particularly as that had happened with the same fund manager in the previous year. And also that the second one being that the Blackstone investment, there should have been more due diligence in relation to identifying whether there were observable or unobservable inputs. I won't go through the rest of the report, but it does set out our findings on independence and audit fees, as well as the draft audit opinion and the draft letter of rep. So, is there any questions?
Thank you very much indeed, and thank you very much for the work done on this so far. Any questions, committee? I think that one sounds much smoother ride, so thank you very much indeed for that. Just before you duck out, and I know you all have to go on, there was one thing, and forgive me, I did want to mention about the value for money report. At the end of page 22, I'll read it out so you don't have to find it. There's a little bit in there that says, obviously, you wait for management's responses to the concerns raised in the report. And it says, if you're sort of not completely satisfied with management's responses or officers' responses, we will consider exercising our further powers by making formal statutory recommendations. That obviously terrified me. So could you just advise the committee really what we mean by that?
So clearly, as an appointed external auditor, there's a number of statutory powers which are available to you, which include, for example, the public interest report or the making of statutory recommendations, together with some other less well-known statutory responsibilities. What I'm basically signalling there is, given the significance of the financial challenges facing the authority, as has been set out, then when we come back in and do the 24-25 audit, then we will consider the degree of progress and the pace of progress made, recognising clearly and we've had some discussions with officers prior to the meeting tonight, that we're now in February 2025, so clearly by the very function of the timing here, but it's about pace and direction of travel, and some of the challenging decisions that need to be taken. If, in our view, that is not sufficient, what I'm saying is we will consider making statutory recommendations which places specific obligations on the authority.
Just going to say, and we recognise that, and obviously that's it's incredibly important, which is why I said at the response that we accept the report, that we respond to it in a way which is to resolve the issues, and that's really important for us. I did also want to just, if there are no other points, really to thank Stephen and Mark and Ruth really around the work they've done for us. It's not easy to be to undertake that role, and there are local government as a whole, not just here. There are some challenges nationally that everyone's trying to deal with, but I did want to thank them again. Our relationship with them, I think, has been good and professional throughout. Occasional grumpy email between us, but hey, that's I think that's par for the course. But we have to accept the report, and we have to do the right thing in response to it. You have to accept you have a problem, before you can start resolving it, and that is an important response as part of what we'll say. But we will go back. There will be some things that people who are here at the time will be able to say. I think there was a technical point there I wanted to just pick up, Mark, about clearly we are in the last sort of period of 24-25, so some of the things SIPFA will do aren't going to be immediately responsible. There is an issue about how you would reflect that in 24-25, assuming these things go well, because you'll be doing that a bit later on, won't you, as well, which may be worth just making the committee aware of.
Yeah, thanks, please.
So it's probably helpful then if I explain to the committee kind of what the requirements on us as auditors are with regards to these. So where a significant weakness has been identified in a body's arrangements, the expectations on us as auditors under the Code of Audit Practice and the value for money guidance that the National Audit Office issues, which we use to guide our work, is that same condition existing the following year does not in and of itself necessarily mean a continuing significant weakness. It would continue if the authority is not taking appropriate action to address that weakness. Now, that said, we are sat here making the recommendations and reporting these in February 2025. Therefore, we need to reflect as part of the 24-25 audit, was the authority making enough progress through 24-25 against those recommendations? But it would be the direction of travel which would be the focus for 24-25, not necessarily the black and white exact status of how things are.
That's a very helpful clarification. Thank you all very much. And I'm going to bring this to a close, but thank you all on both sides, both parts, for the hard work and good effort you've put in. Thank you very much indeed. We'll move on, and Matthew, I understand that you have another meeting to go to. I'm not sure of the timings of that other meeting. Do you have enough time to talk to us, or do you want to reschedule?
No, I have the joys of Select Committee at 7 o'clock, where I'm presenting something fairly similar. So,
okay, all right.
We're doing a double-hander.
Okay, well done. We'll turn to you, and it's agenda item 6, revised, transformation, digital and technology risk management. Thank you very much for coming along. We invited you along. Please, we're in your hands. Tell us more about the risks and risk management within this incredibly important standard piece of work that feeds on nicely from... It does.
It's a beautiful segue into the world of risk management, and if we were to do this right way around, Claire would have presented a report around the corporate risks, then I would have shown a little bit more around kind of how it happens, but timings haven't worked that way. So if you think of me as a bit of like the Wizard of Oz, you're going to see behind the curtains of how we actually manage risk and what it feels like in reality. So I'm the Chief Operating Officer. I sit across all of corporate services, so I have under my remit legal, HR, technology. So the beautiful microphones you have now are part of what I've just ordered, so we can actually have effective meetings.
I find the buttons more difficult on this.
Yeah, well, I think you're the first ever people to use them. So.
Chairman, I did also say it would have been easier to have a USB port on it. It would have been even better.
Well, I will go back to user design and how we should consult people before we roll things out, but yes, that's a really good point, actually. So I'm going to talk a little bit about what we do in terms of my role as leading transformation, digital and technology, and what does that feel like from a risk management point of view. And you've probably eagerly been looking at the screen and go, what's on this screen? So I'm going to take you through my presentation, if the clicker works.
Should have gone for clickers as well as microphones.
Or I can just do it on here. It's probably just gone to sleep. Well, let me talk to it whilst Ryan sorts it out. If you click on the right button here, we'll just click on the right button. I can just do it manually. That's cool. It's not working. There we go. Lucky I'm in charge of IT. So in terms of how we manage risk, so we've got the corporate risk register. So that shows the risks that impact on the whole council. But then also underneath that we have an operational risk register. So as a corporate director, I have an operational risk register. So that shows the risks identified and managed that impact a service or a couple of services rather than sits across the whole council. So thinking about how we manage risk, there's the big stuff. That's the big stuff that matters across the whole council, and then you'll get individual services. It's important that you do both, and you have that sits across all of our services, and we understand risk from the complexity about a big business that runs very different services that impacts on lots of people. So we have a way of doing that. So in terms of project risks, we identify and manage that through a project life cycle. So in my world, that when we're running things, we generally run projects, and then we manage risks actively through the project life cycle, from the design to the delivery to the post-implementation of the project. We have governance in terms of how we do that. So when we're thinking about that, we have project and program boards where you get people like me as a senior responsible owner of the projects that would sit across with some of my project managers, my program managers, and on a regular basis that I have program boards that have risk on all the agendas against each of the projects. So we're thinking about it in a very disciplined way. So I have a number of programs that sit across all of my digital area. Risks are part of every conversation about every project, and that's actually run on a monthly basis. So because risks will change over time, you're looking at the mitigations as you go, and we do it in a very robust way. But that's the reporting within the programme and project board. Then also you've got the governance that sits around it, so the escalation point. So you've got to make sure that from an individual project that you'll manage it from the project manager to the SRO, and then right the way through, as it says here, to the senior management team, so my directorate management team, where we review risks on a monthly basis, through to the business design authority, which is a cross-council body that looks at all the digital and transformation changes, then onwards to CMT, then to members, so through my regular monthly meetings with my cabinet members. So we cover everything from an operational to a governance perspective. Go from both machines. So we have one risk on the corporate risk register that's related to digital transformation and technology, which is red, and that's around the overspend. So that's the segue that the chair talked about. So how we managing our budgets. How do we need to deliver significant transformation that will help manage the budgets moving forward? And within the budget that's being proposed to Cabinet and onwards to Forward Council, we have a piece around how we are using the target operating model and the savings programme as a way of mitigating those risks to achieve a balanced budget by the end of the year. Then there are two risks, again, on the risk register that are ranked as yellow, so amber. So they're the kind of medium-style risks, and they're more in the ICT, technology, digital world. So we've got an amber risk around our systems becoming unfit. You heard around, in the previous presentation, around the use of data and it becoming outdated. Well, you get the same things with systems, is they have a shelf life. If you don't, it's a bit like a plant, if you don't feed and water it and care for it and sometimes replace it, it wilts, it doesn't work any longer. And so a part of our amber risk is we've got to make sure we have the funding programme to make sure that we can keep up to date, and that has an impact on service delivery. So you've got some big systems, so social care systems, education systems, housing systems, that we've got to make sure that they're both they're both up to date, the data in it's up to date, but also they connect in with each other. So we've got an investment programme as set out by the Cabinet through the digital strategy to invest in our systems around that. So, but still an amber risk given the volume of systems we run, the complexity of them, and also the integration of between them. And the second risk is outdated ICT architecture, and poor security also is the risk of cyber security. So I will go into that in a little bit more detail. It's a bit like the trendy risk that you'll see it from every organisation across the world, both private sector and public sector. Cyber security, if you've got systems, then that's always going to be one of your more significant risks, and I'll talk through some of the work we're doing around that later. So mitigations, excuse me. I talked a little bit about the governance process, so that's from projects right the way through to the governance around how we look at risks. In terms of the risks that are more specific to some of the risks that you've seen, we've got our upgrading and replacing legacy systems, so I have a consolidation and improvement programme, and this looks at, for example, that we will be replacing our planning system at the moment. It's been sunsetted, which is a technical term, which means it's going out of business, and so we have to replace it. And we're constantly looking at our things like our social care systems, our housing systems, to either upgrade them, replace them, or change them. So we have a programme of investment around that, as I said, through the digital strategy. We also do life cycle monitoring, so we look at our hardware and software on a regular basis. So we're looking at our infrastructure on a regular basis to see how it works, how compatible it is, how fast it is, how operational it is. So we have a load of techies that sit in my team that are looking at all the data that sits behind our systems to make sure they're operational, they're working well. We have regular audits through Claire's team. We have internal audits that look at our IT systems. We also bring in external advice to look at some of our bigger systems, and we also have support from external consultants as well. We also work really closely with people like Microsoft, who run a lot of our infrastructure, and they run our laptops as well. So we're constantly looking at, from all the different angles, both externally and internally, about how we're doing, and we take on the advice, and I would say we're very open to look at and be challenged in terms of what we do as part of the approach since I joined the organisation. Actually, the most important thing that I've learned from my many years of doing this role is investment planning is the most important thing. So, as you've just heard, our budgets are limited. Understanding the investment life cycle, actually, we have a 3-year plan. We know all our systems. We know when they need to be replaced. We know how we need to be integrated, and we've baked that into the budget moving forward. So we're in a strong and stable place to understand how we've done that, but also that needs to be reviewed on a regular basis. And if you ever read the news about things like AI and areas around that, the world is constantly changing, as is how we're running an organisation, and you constantly have to review your investment plan to do that, and we've done that as part of the budget process this year. We have technical controls to reduce risk, so again we have a really good setup about how we monitor our infrastructure, we monitor our cyber risks, and we have a series of people that do that on a daily basis, so we're checking everything. So we have a console and a dashboard that basically I can see everything that sits around the council in terms of our ICT infrastructure, people's emails, the cyber risks. So we're constantly on top of that, and we have the monitoring arrangements via our performance monitoring of that. And we have a saving schedule and programme as well, so in terms of how we monitor the saving schedule, so I work closely with Richard and his team, that we monitor that's aligning with the budget process, and that's also aligned with our financial reporting, that we're checking our savings programme. Also through our Chief Executive, we challenge all of our corporate directors on a 3-weekly basis around how are they delivering their savings, what support they need, and what are the risks surrounding our savings programme. So we have a strong and robust governance that sits around both our technical side but also our savings side, and we obviously report that back into the public domain via our budget reports. So in terms of transformation risks and mitigation, so some of the risks that you've heard through the previous presentation is you have threats to think about our budgetary position. So we're constantly looking at those again on a regular basis as part of our governance. So for example, changes to income. So we set fees and charges, but income doesn't always happen the way you'll think. There's a sensitivity analysis. We're looking at income all the time, and we're reviewing that on a regular basis. There's impact of policy changes. There's a lot of policy changes coming out of the government at the moment, changes to our financial, changes to policy that impact on services, changes to how we run the organisation. So we're constantly on top of those to see how they impact on our budget. Again, with Richard's team, but also as part of the way we run the organisation, we're testing those and feeding those into the budget process, but also we have to have a check on them on a regular basis, and that's what we have a corporate management team to pick up issues like that. And also you have some issues that sit within the services but sit across the council. So you've got employment and third-party cost increases, so we're checking on those on a regular basis. You've got, from a procurement point of view, you've got inflationary increases to contracts. So we've got the governance that sits around to monitor all these changes, and it really does describe how a complicated organisation and how it's tricky to keep on top of all the changes that are happening within the sector, within the world, within the government, within the organisation itself. So that's why we have strong and robust governance to manage those. We're assessing vulnerabilities, so we've got regular tracking and monitoring against projects. So that's the savings programme. So again, the 3 weekly checks with the chief executive, but also the support myself and my team give to help projects. Now, projects don't always go perfectly. They never do. I've worked in this area for a long, long time. It's about how you mitigate the risks. You're picking up the issues, you're picking up the risks, you're putting the mitigations around them, and sometimes you have to correct course. Sometimes you actually have to stop projects. Sometimes you have to change course and add in additional savings throughout the year. So that's why we have the constant, robust monitoring and support for what we're doing around that. And we're also assessing the impact, because we know that through delivery of savings, we're also changing the business in itself. So they will have impacts on staff, they will have impacts on residents, they have impacts on the community. So again, we assess those on a regular basis to understand what the impacts could be, and we have to work at pace, and we have to get the balance right behind doing the right form of consultation, the right form of engagement, the right form of kind of user design. Is used the example of a USB port on here, which would have been really useful. Sometimes you have to get the balance right of understanding how we're going to engage, consult, design services with residents in mind to the pace of savings we have to deliver because of the financial situation we're in. So again, that's where we use the project boards to work through that. And then we have to implement the risk mitigation strategies. So we have specialist staff, so we get support from Claire and her team, as well as we have specialists, we have people that work on projects that understand risks and understand mitigations, and then we support the programme, and I have a transformation team that are there to support officers across the council to deliver those. As Richard described, we use capital receipts, so we use capital receipts to fund the DSG. We also use capital receipts to fund transformation, so invest to save opportunities that we're pump priming areas of transformation. So digital is one of those. So we have to spend some of our capital receipts to be able to deliver the changes that we need to do through more digitising for residents, but also of our processes within the council. And we're a people business in the end, and actually some of the bigger risk mitigations are about training, communications and awareness. Some of the things that often get missed by organisations is about how you're skilling up people. Whilst you're making changes, you need to do learning and development training to make sure you can implement those changes and drive the savings, the productivity changes, and also embed the changes. But also we need to communicate to residents, communicate to our staff about those changes, and raise awareness of what we're doing. Again, it's a fast changing business. We're doing quite a lot all the time, and we have a communications team that do that. I'm going to go through a little bit more quickly. So we also have an operational risk register. So this is the bit that sits under the corporate risk. So in terms of my area, we have operational risk registers, and actually the 6 items there cover the breadth of all the things we have to think about when we're considering the risks that I've specified. So there are technical risks, so they're the cyber attacks, environmental risks, so you might get power outages, flood, fire, and we use emergency planning as well as risk management to think of those. We've got technology investment risks, so out-of-date systems. Again, that's why we have an investment programme. We have staff risks, and again, this is an ever-changing business through lack of skills, availability of talent. For example, whilst it's difficult to bring in planners, social workers, it's also difficult to bring in people that have got good digital skills, people with good technical architecture skills to mitigate some of the risks, and we're always competing in a difficult market because we work in London. We've got supply chain risks, so not all of our systems are provided by us, as you well know, but we've got a supply chain risk that go from a direct to an indirect supplier, and actually they're always at risk of things like cyber security, data risks, outages. So we have strong contract management, we have strong supplier engagement to mitigate some of those, and some of those things did actually happen in this financial year. So we had a couple of suppliers that had cyber security attacks, and we work with them to make sure we mitigate that risk in terms of the impact on our residents. And we also have data risks as well. You know, again, if you read any press around AI, you've got data risks in terms of confidentiality, integrity, availability, and how we're using the data to make decisions. So again, we are considering all of those within all of our projects and how we're running our systems. And the big one is cybersecurity. So I'm going to the Select Committee to present our work on cybersecurity, as I do on a regular basis. And this has the impact. I mean, it's teaching everyone to suck eggs, but the impact of a cyber attack would be very large. It would affect a large number of people across the council, and it would impact on our residents. The likelihood can only be reduced so far. So it's happened in a few local authorities. My guess it will happen to another local authority in the next 12 months. Some of it is, you know, how much you can protect your own organisation. Some of it's a bit of luck, actually, in the end, because if someone really wants to attack you and they think you're a target, as well as across the public sector in general, they can generally infiltrate an organisation. But we do the best that we can with the investment that we've got to make sure we're as secure as possible, and we are pretty secure. I think we're one of the best local authorities in terms of how we do that, so we put the mitigations around that. So the mitigations around cyber in particular, I'm using this as a case study to understand how we manage one of our most significant risks and talking you through the detail. So we identify assets and threats. So we have an information governance board, so to make sure we're managing our assets and we're managing our data. So in terms of GDPR, we have information asset registers, we have an infrastructure configuration documentation, so whenever we're changing any of our technical systems, we have documentation to understand what those changes are. So if we are attacked, then we can understand how those systems work, what are the changes, and we can go back to what it was before or understand what they look like. We have quite a lot of compliance programs that we have to do through the government. So we have PSN, COCO, PCI, DSS. So we're judged on those externally, and we also have the MHCLG of just rolling out the cyber assurance framework, so the new CAF framework. We also assess vulnerabilities, so we've been part of a cyber risk assessment, which is what I'm talking about, a select committee. So we've just had the LGA Cyber 360, so that's an end-to-end review of the entirety of the organisation around cyber. So we put ourselves forward for that. That's holding up a mirror to yourself, seeing how good you are, and looking at the recommendations. Suffice it to say, we came out really well in terms of what we're doing. We know exactly what we're doing around cyber. We have the right levels for investment, and we have moving forward, we have the right plan to get where we need to get to, and we were one of the first organisations, in fact the first by Microsoft, to put out Microsoft's new cyber tool as part of our investment programme. So we're really ahead of the game, and we've got the staff in construct to do that. And we also looked at best practice as well, so the National Cyber Security Centre, so NCSC, there's 10 steps of cyber, and they have come in and done a few exercises with us to understand, and these are the best people in the country, is to understand how we would assess our vulnerabilities, what we would need to do differently, and that's helped to shape our investment programme, shape our work programme moving forward. We also implement risk mitigation strategies, and these are the things we do on a regular basis. So technical controls, again, I have a cyber team that put in the technical controls about how we manage our estate, and what we're allowing, what we're not allowing. So again, you'd have read the news around some of the tools out there at the moment, particularly the ones from China, and ones that we ban, so we don't allow staff to use. So we can block certain tools out there, and the ones we allow. So we look at those on a regular basis and understand where our data is going and how we use the data. and that's where we have the policies and procedures for things like the use of WhatsApp, things like the use of CCTV, how we're using our data, how we're using our technology to inform what we're doing. Again, we look at those through the prism of risk when we're thinking about what they are, but we also have to think about them under the general power of well-being, about how they're being used to improve our organisation. So me sitting in the hot seat is I'm always taking a balanced view between the two, and we have the governance and advice to make sure we're making the right decision as an organisation, and that will be ever more critical over the coming years as we're thinking about AI and the use of data. We have training and awareness, so we make sure our staff are trained in things like cybersecurity, phishing attacks. We've just rolled out a new phishing simulator. It's not a phishing simulator, and it's not as interesting as that, but that's checking. Actually, one of the key areas is staff getting attacked. So staff clicking on things by emails they shouldn't do because they don't understand what they are, and they're getting more and more sophisticated in terms of phishing. So we've put some simulators out there to test staff, to give them the awareness as well as cyber awareness for all staff. And again, we've made smart investments as an organisation to recognise that's an important thing we do as an organisation, and we've rolled that out. And again, that came out strongly in terms of leadership and training and development across the council in our LGA 360. And as I said before, we do exercises and business continuity tests. Again, I think you can never do enough of those things, but we've got to think about our budgetary situation. I could do business continuity tests. So, for example, if emails went down, if a system went down, and what we would do, we have so many systems, it's unrealistic to do that all the time, but we do enough of them to understand what the threats are. But we also have business continuity plans, and we need to improve those over the next year in terms of some of our big systems, which is one of the improvements that I've identified and that we're moving forward. But we're still in a good place compared to most other local authorities in terms of our knowledge around that. Again, I won't go into this because I've kind of covered a lot of this. This is, I would say, the golden thread of how you're managing risk from a programmatics point of view. So how it goes right the way from cabinet, right the way down to officers, and the checks and balances through the governance arrangements we have as an organisation. Now, it's quite easy to say they look nice on a big screen there. It's actually about how you use the meetings, how regular they are, the information that's provided in those. We constantly strive to do it better, to make sure that we have better information going into those, we make better decisions as an organisation. But from a management of risk perspective in my area, again, we do this on a regular basis, and we make sure that we are planned, managed, and we have the governance that sits around those, so we've got the controls. And actually for me, I have the oversight of all the risks that sit across my area, and I have the controls around those. And again, I won't go into this into detail, and it's really hard to read if you're sat over there. So I should give you like theatre binoculars for some of these. These are actually the programme risks we have at the moment. So with 5 being the highest score that sit across the digital programme, which is how we deliver the digital strategy, is the risk. So from resource allocation to technical integration to scope creep to change management, again, these are all set out from a programme point of view into our projects, and that's how we manage it on a regular basis. Again, my role is to sit across those and make balanced decisions all the time, reflect those back into the governance and escalate those back to CMT and back to the cabinet as needed when they're more critical. And that's it for my presentation. That is how we manage risk in my area, and I'm quite happy to answer any questions around anything you've heard.
Thank you very much, Matthew. Thank you for coming along talking to us about a very interesting portfolio of work that you're doing and the associated risks. I see hands all over, so we'll take it from the end. Councillor Higgins first, then.
2 questions. You forgot planning on the previous slide. As a committee, you've got all the other committees there for planning. Yeah, so,
very eagle-eyed.
Yeah, thank you. No, obviously because I'm the chairman of the committee, so that's why. The other thing is, it's about, I spoke about earlier about depreciation. In the report, the depreciation for IT equipment, infrastructure and assets is 5 to 7 years, which seems to me, with such a technology moving so fast, it seems a very, very large window. So we're saying from 0 to 5, everything's fine, but it's not. So do you sort of look at the situation, because budgets are very tight, we would be getting to the stage where we're actually leasing stuff rather than buying stuff because it might be cheaper that way? That's what I'm trying to...
Really good question. So these things are our new machines, and we've had the old ones. So we're rolling those out at the moment. We're about half to two-thirds on rollout. So these are new Windows 11 devices. They depreciate actually on a weekly basis, and actually we see the stats on a weekly basis of the depreciation of, and these are our most valuable assets. So we actually took a paper to cabinet about moving our models from a buy-in to a more of a buy-to-lease model, and actually we did an options appraisal of all the different models against all the time scales and looked at which one was most financially beneficial for the council. Actually, the assets are about 4 years is about the right time period, but you've also got to look at, in a slightly boring way, you've got to look at the operating systems and the things that sit around it. And there was the perfect opportunity to roll out new devices because they depreciated and there was still some value in them to invest in the new ones whilst rolling out Windows 11. And actually some of it is about looking at optimal times to do it with the suppliers, because they offer incentives, for example, from a Microsoft perspective of what's the best time in the year to do it. So actually we were pretty smart as a local authority, and we've got a really good deal on our new devices. They're leased, and the good thing is we can recycle some of the devices, and we've committed for our digital inclusion program to recycle up to 500 devices and get them out to the community as well. So as we are currently rolling out, we will put some back into the community whilst leasing them in a much cheaper way than we did before. But yeah, they depreciate pretty quickly after 4 years, so they're actually not massively valuable once you get to 4, 5, 6, and then they're much worth nothing apart from parts at that stage. Actually, you can recycle them and they're actually still worth something. So again, that's a good part of understanding how we do our project governance, is really detailed options appraisal and looking at all the options for the different you would think it's just buying and leasing. There's actually about 5 different models out there at the moment, as well as looking at the timeline of asset depreciation value. So again, I did it very closely with the finance team to come up with the best answer for the council. And I'll do one more thing, because that was quite a long answer. Actually, we bought our new Microsoft cyber, so we're the first local authority to do that on the back of saving money from the buying of devices, because we did it in a smart way. So we reinvested it in cyber.
Lovely, thank you very much indeed. Councillor Cawthorne.
Thank you. A couple of questions for me. Since this is the Audit Committee and we're all about governance, it's really a point of order really. So this is a part 1 item. The presentation we've got wasn't on the public website I'm looking at now. This is where I'm accessing papers. Should it be, or is there a separate reporting requirement elsewhere in the calendar year so we can see what's happening around digitisation? Is my first question.
So we've committed to do an annual report on our progress around the digital strategy. The digital strategy was agreed in, I'm going to get the date wrong, I think it was October, so we'll bring back an annual report and we can bring that to the Audit Committee, and it will go to the Select Committee as well.
And it'll be published?
Oh, absolutely, yes.
Okay, just to be clear. And my second question is around risk management when it comes to residents' experience, and I'm pleased to see that's part of the work that's going on. Although you talk about community engagement around road testing, and you're used to me asking you this question in other places, Matthew. Can I just be clear whether that's happening now or whether it's planned to happen in the future moving forward? Because I think that's an important component of all this.
Yeah, as I mentioned, so it's happening in parts now. It's not happening as much as I would perhaps like. We intend to do more of that as we more roll out our digital tools. We've only just had the significant investment and the time it takes to get that investment and start to digitise. A lot of the things that we've been doing are more internal processes initially. So again, we road test them. In fact, we've got about 3 or 4 out there at the moment that we're testing, and we've rolled out some new ones. And then it will be more doing some of the more public-facing ones, which will be starting very soon. So more of the big ticket items, and we will be testing those with members of the public.
If I may, through you, Chairman, I think it would be good to understand more about that as soon as you can share it, please. People out there take an informed interest in this sort of stuff. They do want to know what's happening, so thank you.
Thank you very much. Councillor Burners.
Thank you. I just saw something in the news today Hammersmith and Fulham claim I think it's 40,000 attacks a day. Do we know how many attacks our systems get at all?
Oh God, you're going to tell? Yes. So I'm not going to give you the exact figure. It's not that much. So I have a monitoring report, which is a daily report of the cyber threats. You'll see it's not static, which is the real answer. Sometimes it's pretty low. It's when you see the spikes is where we're worried, and then you can check them by location. So actually what we have is a sophisticated monitoring system that picks up the cyber threats on a regular basis. So they're pretty much all defended, and then you get from certain countries and certain areas, you'll get more concerted attacks. It's a bit like on your personal email, you'll start getting lots of emails from certain ones that go into your junk, but initially they might go into your inbox. So we monitor it on a regular basis. We can see all our numbers. I get it on a daily basis, and then my team check whether there are any spikes or there are any location-based issues. So yeah, I mean, it really does change on a very regular basis, depending on day, as in you'll get more. You're more likely to get attacks that are more significant at the weekends, because that's where you're less robust. Cyber criminals are very, very sophisticated, and they generally come from certain parts of the world. So we can see all of that, but I can come back and I can show you. I haven't got it in front of me actually. All the cyber numbers, but we have a really sophisticated to do that, and our Microsoft technology enables us to get the very, very detailed analysis of all the cyber attacks.
Councillor Nelson.
Thank you, Chairman. Matthew, just wanting to know, I know you're rolling it out to all the select committees, but as councillors, we also need to know and understand how the system works, because all these things is rolling out. But at the same time, we don't understand how it's working. We don't understand how we can manage it on our system. Like now, I'm still on paper copy. I'm not able to understand how the system works, how we get into it for us to do the work that we need to do. So can you give me an idea on that?
Yep, so we recently did a training and development session for all members, of which digital and technology and cyber were part of the options that all members could choose to go to the session. I'm quite amenable to do more of those for members. If you're having trouble accessing committee papers on laptops, then I can take them back and work with our committee people to make sure that you've got some training around that, to make sure you use the basic tools that you've got to able to access that. Our preference, and it is in the budget for next year, that we don't use paper copies moving forward. We'd like to help members understand how they're using it on laptops to reduce the cost of the council. Obviously you've heard of the challenges we have around budgets. We do have a budget saving around that, so if you're struggling to do that, I will take that back to my team and make sure we can do some more training and development around how we do that. So I appreciate that's getting input from users and doing something with it, so I appreciate that.
Thank you very much indeed. A final question from me, and just in the interest of time. Transformation. There's a lot riding on it, and you've talked us through neatly some of the other risks around the areas you're responsible for, but also transformation. In practice, are you confident that the transformation initiatives are proceeding in the right direction? They'll play their part in successfully digging us out of a bit of a hole? Tough question, I know. Yep.
So, and it's been the same in this local authority as every local authority for the last 10 years. We've had multiple transformation programs, savings programs, or whatever you want to call them. There's significant savings put into the budget for next financial year, future financial years, about what we need to deliver. We need to improve our track record of delivery of some of our transformation and savings programs, in particular in the next financial year, to make sure that we can balance our budgets. Critical to that is making sure we make the right investments from a transformation capitalisation point of view, to make sure when we're disposing of properties we're using that investment most wisely to deliver the savings, recognising that we need to increase the speed but also increase the capacity and skills in some areas that we perhaps don't. In particular, we need to prioritise which areas add the greatest financial benefit and make sure we're putting the investments around those. And some of that is by having really good business cases that we understand the ROI, but also making sure that we've got the governance. Because again, I said it openly in the presentation, is projects don't always go right. They're not a straight line, they're a wiggly line. We have the governance and the leadership approach to make sure we're managing that wiggly line, to make sure it's as straight as possible, and to make sure we're delivering the savings. I think it is unrealistic to think we're going to save everything within the budget. Our job is to make sure that we deliver as much as possible, and actually a year happens really quickly, so actually you're delivering a lot of change in a year, and actually some of it's about how you embed some of that. So it's not just the delivery of the saving, it's about understanding the impact of the saving, understanding the embedding of the changes, so you can rush and deliver too many quick savings and actually not set yourself up as a sustainable organisation moving forward. So you always have to take the balance of delivering those short-term saving as well as what it's mean in the medium and long term as well. So it's a careful balancing job that the corporate management team as well as the cabinet have to make in understanding the impacts of those. But we have the right level of investment, we have the right governance that sits around it, and most importantly, we have the will of senior leaders in the organisation to make it happen.
Thank you, Matthew. Richard?
Yeah, just to say, I think the team that Matthew runs have done some really good work within the authority. So it's good to see some of that go on really. One of the things I always do when Matthew comes in is making sure these are cashable savings, that we actually get savings out of it. And the way we're forcing that to be a real issue is not holding these things in the corporate centre. So if Carrie Williams' team go out and sell assets, we need that to happen, because the budget all connects together to invest those usable capital receipts in transformation. But we're only going to do it where there's a business case that's strong enough for us to make the cashable savings. Really, there will be efficiencies clearly that are non-cashable, but the cashable stuff's really important for us at the moment. And the way we force it is that we will take the budget off the service areas that are benefiting from the transformation, to make sure that they're really looking at the budgets they've got, because I will take the money away, and that focuses their attention, and their relationship with Matthew, I think, is improved and strengthened, because both sides are looking at it really, really carefully, as opposed to it being some sort of corporate centre budget that doesn't quite get the focus and attention it needs.
A bit more transparent, isn't it? As you say, it focuses them on. Matthew, conscious of the time, thank you very much for your time and the presentation.
Thanks, everyone. Thank you. Enjoy the rest of your evening.
Right, ladies and gentlemen, I've never chaired an audit committee that's run over, so this will be a first for me today. I apologise for that. We've got a packed agenda and a number of very important issues that we've had to chew through and discuss. So we will proceed. We're not going to rush things through unnecessarily. Neither are we going to spin it out till midnight, I don't think, either. So let's keep questions focused on the important things, and the presentations too on the important things that we need to know about as the committee. So seventh agenda item, which is over to you, Claire, risk management and strategic risk report. Thank you.
Thank you. We'll start with the risk management report. This is at the end of quarter 3, so that is the end of December position. There has been an increase in the number of risks, so up to 250 risks, and also an increase in the number of red risks from 14 to 20. I would like to say that there has been a very positive, significant decrease in the number of unscored risks, which I raised at the last committee. We've gone from 90 to 31, and actually further investigation into those 31, 26 did have original risk scores, but not a current risk score. So that's something that I've set in action for myself to look into, and working with those risk owners to take that forward. There is 23 new risks, 6 of which relate to financials, which we'd expect given the financial pressure the council's under, and only 3 have been closed. Now this is raising questions around, are we taking actions against our risks to reduce them down and get them tolerated, get them closed? So we have started monitoring the timescales for how long risks are staying on the system without moving. We've included a new graph within the report looking into this, but this is something we'll develop further for the next quarter update. We have 61 overdue for review, which is an increase again from 48 at the end of quarter 2. I would give the caveat that it was Christmas potentially, but even taking that into consideration, there was still an awful lot of overdue risks that should have been addressed before then. This includes 7 red-rated risks, and there was also 36 actions also overdue for review.
So again, in terms of making sure that people are taking that action and reviewing their risks on here, they get automated emails, and they're clearly not taking it seriously enough. Again, this is something we're looking at through the establishment of a governance board, which we're going to be setting up, and they will be taking forward and looking at this and holding people to account for making sure these risks are being updated. In relation to the corporate risk register, so these are the red rated risks. We've had 7 added and 1 removed, which are listed in section 3 of the report. Again, the largest risks are balancing the budget in the short and medium term, which we expect, so that's quite consistent with previous quarters. We do have a new A1 risk relating to insurance valuations due to poor asset data. This is something that was added during the quarter, potentially needs to be reviewed, but it is on there at the end of the quarter, so it's been included. We do have a meeting booked in with CMT to go through the risk registers and also go through the strategic risks, which are included in the separate report. I also actually have a meeting booked in with Matthew to talk about the governance arrangements around risk management, around setting up that governance board, and making sure that that is taken forward to hold people to account for these risk areas. That's all I was going to say on the risk report, unless there's any questions.
I'm sure there probably are. Thank you very much indeed. Colleagues, I've got a question or two, and it's more an idea that perhaps I wanted to float past colleagues on the committee. I like the report, and once again, very well presented. I can't help but wonder the same sort of thinking as you. You know, are people taking this seriously? And what, you know, we can have risk management on paper, but you know, we really want it in practice too. But the paper helps us, and I wondered whether the committee could maybe put together a little letter to send out to some of our colleagues who haven't done what's expected of them. Not everyone, because there's a lot of people who are very busy, but the 7 red overdue risk owners and the 10 red risk owners who haven't put any sort of actions to deal with their risk on the system. I wondered whether a little nudge from the committee could be a good idea. Councillor Dennis.
It's great to have you back, by the way, John. Despite the meeting overrunning, very pleased to find out that you can decide to continue joining with us. I think that's a really good idea, because I think at the last meeting we did discuss, you know, seriousness of taking on risks, and it was a question I thought actually when Matthew was speaking, but I didn't bother asking it, is, you know, the difference between paper and reality when it comes to this stuff. I think it's a good idea. I think, though, we only need to write one letter to the Chief Executive, because then the Chief Executive can take it forward with the information that Claire's got. And then we can get a report back from Tony about what's happened to our letter.
Right, I can leave the detail to others to work out, but that seems a much more efficient way of handling it. Tony, can we send you from the committee a short letter then, sort of expressing our concern in respect of these red risk actions that are outstanding and the overdue ones that really ought to be followed up as a priority, to encourage this improvement that we all want to see?
Yes, if you wish. No, Claire and I have talked about this on a number of occasions. There is still much more work to do in terms of the embedding. So what we've done at the moment, we've got far better process. It's the engagement with it. And I think I was going to actually say before you said that it's probably more actually for me to follow up, so you see the result of that rather than you need to ask me to do it in order that it then comes back, if that makes sense. So what you should see is a positive improvement in the report rather than needing to follow it up in any other way. So I've curtailed it even further, but
so no letter needed.
But as a starting point, if you wish, I'll welcome it, but I will follow it up within the minutes of this meeting.
I'm happy to take that assurance and it be minuted, but the proof is in the pudding. I'll pass over to colleagues. Ladies first, then.
It's just a quick, just a clear clarification, because I remember the last time we had a meeting, and when you raised the issue of risk, you said there is lead responsibility that can be taken in regards to getting it done. Were you able to implement that? Seeing that the risk is high here?
So each individual risk will have a different risk officer. So every service area, heads of service are all set up on the system, and they all get automated emails through the system to update their risks when they become due. We do have risk champions within each directorate, and previously we had a corporate risk management group that would meet with those risk champions. That is moving into the directorate governance group that's being set up. So that is where they will sit going forward. So that's what we're working on establishing to take that forward.
Thank you very much, Claire. Councillor Cawthorne.
I suppose it's on a similar thing, really, but I guess it's, I would like to think as committee members we can be assured that as a matter of course senior management, including those in this room, are doing everything within their gift to make sure these things are delivered. So those conversations are taking place already. What we're saying is something over and above to supplement that because it's clearly not working, or do those conversations still need to happen? And I know there'll be a generality, won't there? There'll be a mix, but any comment on that would be helpful to understand.
So I can't talk for what happens in every directorate, but I would say, and I think this kind of comes into one of our later reports in the progress report around governance, is there is an awful lot of change going on across the council. There is an awful lot of focus around the financial pressures, around transformation, so potentially some of the more day-to-day mundane but still very vitally important things like risk management, reviewing of risk registers, potentially is not as big a priority because we're so focused on all the transformation stuff. I imagine they still get discussed and talked about, but probably more of a in relation to projects or in relation to this is our biggest risk, what we're doing about it, we need to get things done, as opposed to updating JCAD as a system. That's probably something that gets more lost because we're so focused on other things and priority areas instead.
Thank you very much. Councillor Higgins.
Yeah, I'm more of a carrot rather than a stick. So I like the fact that it should be left with you, Tony. I really do. I just think that we've got so much change going on in the authority that some of this is maybe someone might be doing the risk because they haven't got the tools that they've said that we're going to have, and then we get into this situation that we're calling out people. If anybody would like to write, I think you could write, John, as the chairman of this committee, rather than us as a committee regarding that you found those issues, because that's what you're there for. But that's my view on it, anyway.
Thank you very much, and I welcome the feedback. I think we've got a way forward, though. No one's interested in paperwork or bureaucracy for the sake of it, certainly not. But as we said last time, transformation and change, when there's a lot going on, we need to be managing the risks as well as we can, and this is a tool to help people do that and to encourage that in the mindset and the culture of the authority. So getting the balance right is important, of course, but with the red stuff, if we could have a nudge to get people to think a little bit more and to get the updates in on time, that can only help, I'm sure. Councillor Higgins.
Sorry, through you, Chair. If there is issues in those things, then you should be bringing that to us on this committee. So if there is a particular area where we keep getting reds and something's not happening, instead of us coming to the question, so we have to write a letter, can someone inform us why it's happening? So that way, we're not, we take, this is our only monitor as someone, we like colours because that's something we can look at, whereas you've got the detail. So the thing for me is to make sure that if there is an issue in a particular section of the authority, then that needs to come to us and say, why is that happening?
Yeah, if anybody comes to me with issues, then absolutely I'll report it back, but I don't get engagement from services saying, I can't access it, or there's changes, whatever. No, I don't get stuff like that, but if I did, I would tell you.
Thank you very much indeed. We'll move on. Agenda item 8, the internal audit strategy, charter and plan. 3 for the price of 1. Over to you, Claire.
No, I didn't know whether you want to talk about the strategic risk register. The only thing I was going to say on...
was there anything extra?
Yeah, so the only thing I was going to say, so the risks themselves have stayed the same as previous. One thing we have included is the new KPIs. So Matthew and his team, we've been working with them to develop a members dashboard with a lot more KPI information, so key performance indicators. I've then taken those indicators into the strategic risk report to use those indicators as one. There is one point of the truth. There is no kind of like me taking figures from elsewhere. We're all going to use the same data from that dashboard. So that's why those figures have changed significantly. I only have red or green. You're either hitting the target or you're not. And everything I've taken is from that dashboard. So if there's any issues or incorrections with it, we're fixing it on the dashboard, and then I'll fix it on here, rather than me trying to change the figures or anything like that. So that's why those KPI targets look a lot different, but we're still working on those.
Thank you, and it was remiss of me not to pick up on that and comment on that. I really like it. I haven't gone through in the fine detail thinking, is this some sort of perverse indicator or is it spot on? I don't know the detail to be able to give that opinion, but I really like it. I'll reflect a bit more on this as time goes on. Councillor Cawthorne, I'm sure you guys will too.
Just on the adult social care demand one, looking at the narrative under the heading of primary controls, there's reference to something that's going to take place on the 9th of January 24. Just begs the question, how up-to-date is the information that's been presented to us? Just asking the question about this and perhaps more generally.
Yeah, so I take the data out of JCAD, our risk management system. So I don't write any of this. It is all taken back from the risk owner on what they write, and it goes to CMT for their review for the audit committee. I'm not allowed to make any changes because I'm supposed to be independent and giving risk assurance. So yeah, we look at this. This is what CMT is meeting for in a couple of weeks' time, to go through in a lot of detail this sort of stuff to make sure it's updated.
It wasn't CSU who'd written it, it's just what's been presented to us, that's all. Thank you.
Thank you very much indeed. I did note that there were no changes, compared to last time, and we've spoken enough about sort of the areas of financial risk in particular today, but an ongoing and continuing concern for the committee, as you know. Thank you very much. We will move on to the next agenda item.
So we've got the internal audit charter, the internal audit strategy and the internal audit plan. So starting with the internal audit charter, so as I mentioned at the previous audit committee, we have the new global internal audit standards are now out and required to be complied with. So in the public sector, we have to be compliant by the 1st of April. One of the things within that is the requirement to have an internal audit charter. So we did already have an internal audit charter, but I've updated this quite significantly to reflect the new global internal audit standards, and also includes a lot more information in line with those standards. So there's a lot more things on the role of the audit committee and the role of senior management, and also how internal audit is positioned within the organisation to ensure independence. So like previously said, the global internal audit standards are very much focused on making sure internal audit is very independent. There is actually additional guidance being published from the IIA and also from SIPFA. I was actually at training last week that raised some additional changes I would like to make to the internal audit charter. This is constantly, new guidance coming out before the 1st of April when we need to be compliant. So there is certain tweaks that I'd like to make, in particular making a clearer section entitled the internal audit mandate. The information is in there, but it's just basically putting a header in just to really pull that out, because that is a separate section within the global internal audit standards. And if we ever get inspected, I really want to make it really obvious to them that when they're ticking us off as compliant against the standards. So that is just one minor change that I want to make in terms of the internal audit charter, which I'll make following this meeting, as long as you're happy with it. We do require, I think, your approval for the internal audit charter, and any comments on it as well.
Okay, colleagues, I think Councillor Higgins.
Agreed. I think it's a good idea.
You're happy. I'm happy. I've looked at the template, I've looked at the standards, I think you've reflected it well in here. I know you want to update the mandate section, absolutely. The big change for me in the new global internal audit standards, in particular in respect of the charter, is sort of the expectations of the audit committee and our role in supporting internal audit, and in particular its independence, objectivity and resourcing. So there's a big part within this about resources, and if you feel that you don't have sufficient resources to do the job that you've got to do and the job that you've documented in the mandate and charter, then you've got to kind of work through the management chain, but also come to us for support if needed. The committee is always willing to support you in that area. Okay, thank you.
Internal Audit Charter, we have the Internal Audit Strategy. So this is a strategy for the next 3 years. Again, we used to have an Internal Audit Strategy, so it's just been updated. This focuses on the roles of Internal Audit and also our priority areas for the next 3 years. Hopefully they're not surprising to you. Firstly, compliance with the Global Internal Audit Standards. I should really say that as one of our priority areas as they now come in. And also, due to the financial pressures facing the Council and the significant changes, we do have a lot of priorities around key financial controls and governance and transformation, obviously with all the changes going on, looking at doing internal audits into those areas. And then finally, the focus on digital. So looking at data quality as the Council's developing a lot more dashboards, a lot more focus on data, making sure that that data is actually correct and we can place reliance on the information that we're getting. And also how we can use data analytics through internal audit, so making sure we're targeting our audits to focus on anomalies rather than doing random samples, and also focusing on bigger risk areas based on the data that we have. So those are kind of our key priority areas within the strategy. If anything changes, then of course we will bring the strategy back and update it.
Thank you very much. There was about 3 or 4 other things. No, I'm only joking. With the charter, though, I did skip over that. Do we want to approve the charter as is, or wait until you've updated it and then we can perhaps approve it outside of the formal meeting?
Yeah, I don't mind. If you're happy to, just for that minor change, we can approve it subject to that change, and then if I ask you, Chair, to approve it.
Be happy with that if everyone else is. Okay. Any comments or thoughts on the strategy? Look, Councillor Higgins.
I'm just a bit... There's a lot of data that's coming. I mean, you know, all the old days used to punch things in and come out the other end and say, oh, that's what you do. I mean, where does it... You know, the more that we do, the more that goes into the system. When it comes out the other end, as it were, is there a mechanism there to, let's say something happens overnight and then all of a sudden it'll flash or something? You're telling my age, so, you know, Doctor Who's TARDIS and stuff like that. But the point is that I'm just trying to get that there is a lot of information here. And I'm just trying, how do we dissect that and use that information? You know, because if you're going to read all of this every day, it's going to take you all day to read it, so you're not going to do much work. So I'm just trying to say how the end result comes out better, really.
So in terms of the data across Council, so there is a lot of dashboards, and that's one of the things we're working on, is how we identify what is the priority. So we are actually, the dashboards that we're building are focusing on what are our biggest risk areas. So our strategic risk areas from that previous report, we're building dashboards around those, because if they're our biggest risks that basically will make the Council collapse, then we need to make sure that we have key indicators to show whether or not we are managing those, and if we have an action plan, whether or not those actions are working at a really high level. So we don't want loads of information. There is too much. There is very detailed specific dashboards into detailed specific areas if somebody's interested in it, but we don't want all of that data to go to everybody. So we're looking at how can we streamline everything and create that pyramid of data, so the core information at the top is what you need to know, and then each level down gets more and more data in their specialist areas.
Thank you. Councillor Cawthorne.
Yes, a couple of things. Just talking about constructing dashboards and on performance indicators, are we drawing from external sources for that, like Offlog, or perhaps the LGA's own tool for that, or are we constructing it ourselves with our own source of information? That's the first question. Shall I take the second one as well?
So in terms of that, so the data, this is the business intelligence team. I am not developing the dashboards, definitely not technical. I attempted to do one, and that was my limit. So the business intelligence team, they take data from all sorts of different sources. A lot of it is taking it directly from our systems. So whatever systems the different services are using, they're taking the data directly out of that. So we don't want to take things out of the system into Excel, manipulate it, manually calculate something into a graph and then present it in a PDF or in a PowerPoint presentation. This is taking data, live data directly from the system. So there is only one system, one source of truth, taking it from the source effectively. If there's any issues with that data, then we have to fix it from the source rather than making changes. But yeah, taking data externally as well, so looking at benchmarking data, there's so much data they're looking at.
That was said with almost religious zeal. One source of truth. Wonderful. My second question is really around the charter itself. I mean, there's clearly some good stuff in here, and I suppose my question is this all stuff we'd be doing anyway, or is there bits in there that are kind of taking us where we wouldn't necessarily go, given all the pressures we've been talking about all evening on resources and staff, is it actually all helpful to us, or are there bits that we perhaps possibly wouldn't do if we didn't have to, or is it stuff we'd be doing anyway as a matter of course?
I'd say the majority of it is stuff we do already. So especially because of where we've been with the public sector internal audit standards we used to have to be compliant with, a lot of that makes us already 90% compliant with the global internal audit standards. The things that are different is more the roles of the audit committee and the essential conditions and the expectations placed on you guys, and also on senior management as well. This is a thing around making internal audit very independent. So there is a lot more questions around, you having more powers over maybe, Richard and Tony. So rather than, let's say I gave Richard a no assurance report, as my line manager, he could then take it out on me in my performance appraisal and be like, no, Claire, I'm going to punish you for giving me no assurance. This is giving you more power. So I'm sure he wouldn't, but this is giving you more power to say we disagree. So you're more involved in some of those things, like, so if I didn't think that I was being treated fairly, or if I didn't have access to information, then I could come to you as the audit committee to get that support.
He's got lots of power. Okay, thank you very much, Claire, and again, if it's needed, I think the committee are happy to approve the audit strategy. I think the areas of focus over the next few years are very sensible and exactly what's needed. So thank you for that. The plan.
So the internal audit plan, so this is basically we do a risk-based plan, so we have a continuous tracker. So this is basically a snapshot of the audits currently planned for next year. Following feedback on our last plan, I have now divided it up into quarters. I would say quarter one is relatively fixed. As long as you agree to the plan at this meeting, we will get started tomorrow with scoping meetings. We've already got some booked in. So we are ready to go from the 1st of April with those audits. Quarters 3 and 4 are more likely to change. We do expect there to be an awful lot of change within the internal audit plan, because as new risks emerge, we want to be able to audit them. Or if we have other sorts of assurance or other things happen, we might say, it's no longer a priority area to look at. Key things that we've included in there are the data quality audits. So like I say, there's a lot more focus on data. So we have a data quality audit for every directorate, and they are spread throughout the year. Now obviously with the plan, I will take this subject to your approval, and it will go into our progress report similar to what our current progress report looks like. So throughout the year, next year, you'll be able to track and monitor progress and any changes that we have through the plan. So any sort of comments, any questions, it's been pulled together based on our risk areas, based on conversations with CMT, senior managers, based on things that we see external, and based on any sort of findings from this year's internal audit as well.
Thank you very much indeed. Colleagues, any thoughts on the plan? There's a lot of nodding, there's a lot of thumbs up. I thought it was focus on the right areas, particularly, for the first 6 months, and then we'll see, as you say. I'm very happy with it. Committee are very happy with it. Thank you very much. Go forth, have those meetings. Get started tonight. Why wait till tomorrow? That's what I say.
I do know that some of my team are watching online, and they're probably practically emailing it out.
Wherever the camera is. That's from me. I'm getting giddy, it's the lack of sugar, I think, so let's find my agenda. Okay, I thought it might be. Agenda item 9 then, the Internal Audit Progress Report for Q3.
Thank you. So this is going back to this year's plan and the work that we're currently completing. So we have, since the last audit committee, finalised 3 reasonable assurance reports, 2 advisory, 2 limited and 1 no assurance report. So in terms of the advisory reports, the first one related to culture. This was looking at the perception of culture across the organisation, so very much focused on interviewing members of staff, and also looking at the action taken since the all-staff survey that was completed. There were still findings around the level of action that had been taken or developing an action plan. A lot of that was due to changes in key officers involved in that. But actually the culture, the feedback that we got wasn't overly negative or positive. It was fairly consistent with where it had been, and wasn't kind of, a lot of negativity, even though there was all the transformation going on. The second advisory review was around directorate governance. So this originally started as an assurance review, but actually due to the increased focus over the year on council-wide initiatives, so things like ZBB, so the zero-based budgeting, star chambers, challenge sessions, the transformation stuff, there was actually limited capacity within the directorates, like I said previously, to focus on some of the governance areas. And therefore it also impacted on the level of evidence available for this review. Now that doesn't necessarily mean directorates were not looking at key governance reports like risk registers, budgets, key performance indicators, things like that, but it was actually done on a more informal and not necessarily consistent way. Which is why we then changed the focus of this review to being more advisory and looking at developing a framework and developing proposals for what the next step should be implemented to ensure that we're improving governance at a directorate level going forward. So yeah, this was very much a directorate level governance, so looking at different SMT meetings and their governance arrangements within the directorates. In terms of the no and limited assurance reports, we have B&B rent arrears as no assurance and HRA rent arrears as limited. In particular, the areas of focus are around poor documentation, for example, not recording the actions that were taken to recover some of those arrears and not saving copies of the letters. Again, that's limiting the evidence available. That doesn't necessarily mean that the letters were not sent, it's just we can't prove it. And as auditors, that's what we're looking to do, to provide that assurance to you. And there was also areas of poor collaboration between services, so sharing of information, working together to get the best outcomes and to recover that money. And finally, poor management oversight. However, on the other side, the HRA in particular, they had a lot of actions already been taken at the time of the review to address some of these areas, and they already had an action plan and they knew it was a high-risk area and they knew what they needed to do and were taking steps to address that. Finally is contract management oversight. So this was looking at the overarching contract management. So previously we tend to look at contracts individually with how an individual contract's being managed. This was looking at preparing for the Procurement Act and looking at how do we know what contracts we have across the whole council, and making sure that they're kept up to date and we're monitoring those. In particular looking at how directorates and services monitor their key contracts. We do have a centralised contract register that can be extracted from Oracle, but it was found that it wasn't reconciled exactly with separate registers held within the directorates. So we're having that duplicate of information and not quite aligning it and matching up. Similarly, in line with the Directorate Governance Review, contracts were not being a frequent agenda item within Directorate Senior Management Team meetings, so not looking, what contracts have we got that are coming up for due for review, what contracts do we have where we have KPIs that we need to monitor those, and what are our biggest contract risk areas. In addition, we also have 6 reports currently out in draft, so 4 at the time of this review, and 2 further ones since the report was done. And we are expecting to progress and complete the audit plan by the end of March. We have an awful lot that we're currently finishing off. We are also finalising the terms of reference for our final 2 audits, community safety and the safety valve plan. The final audit listed in here, looked after children, was added into the plan. It's actually now we've agreed we're potentially going to shift it back to Q1, just to give us more time to plan for that effectively. We were ambitious bringing it forward into this year. That is an update on our current progress.
Thank you very much indeed. Colleagues, questions, observations? Councillor Cawthorne.
A quick one on the addition of the RAGC and what that's about, if that's possible, please.
So this was just a high-level review, just looking at the, it was an advisory review looking at the Rural Activity Garden Centre, looking at sort of what was happening, going on in there. It wasn't particularly focused on any particular area, just looking at, what they were doing effectively and how we can develop them and support them, and what their ideas are for the future.
Councillor Nelson.
You've got on the send data quality here, you've got 4, so, and the no next to it in red. Can you explain a bit of that, what it's about? Say page 6 here. Page 6 on the report. Page 269, and I'm thinking it's 270.
So that is, for our send data quality report that we did, so this was in July of last year, it was no assurance, and there was 4 high findings. That is all areas that they're currently looking at. I think it was a no assurance report. This is testing my memory back from July. This was in particular around linking between systems. I remember one of the high findings was, and it is. They are currently still due for review, so they're due to be completed in March 25. So that's when, for the next audit committee, we'll provide an update on whether or not those have been completed. But yeah, it was 4 high findings and 1 medium finding from that review.
Richard, just I mean, given the amount of work that's gone into it since then, it would be disappointing if we didn't see an improvement in that area. Really, the big point on governance, and my governance is part of what I want CITFA to get into in particular, is that we have got too many no and too many limited assurance reports. We need to sort that out. These are these are management matters that you shouldn't leave the report or the thought of the auditor coming to respond to. We need to get ahead of that, and the timescales that we're using to do it, certainly for the limited one that's coming to the contracts area, which is my area, the timescale of response had to be shortened because the timescale offered to sort it out from my opinion was too long, and the director recognised that when we had a conversation. So we've shortened the time to respond to it. So we've got to react hard to these, because these are all governance issues that give signals about the organisation having to get itself to a better place, really, and that's why the audit committee is so important for us to help us drive those improvements.
I certainly can agree more. In a way, I'm pleased that there are some no assurance pieces of work. In a perverse way, you're looking at the right things, you're finding things that need to be fixed, and once we're aware, we can take action. But there are quite a lot here, to be fair, and at the same time, there's a number of reasonables. So not everything is broken, not everything needs to be thrown out with the dishwater, but there needs to be that sort of attitude that you just expressed, Richard, of, if you get a no or a limited assurance and stuff needs to be fixed, some stuff needs to be fixed quickly. And that's another important sort of input into some of the thinking around risk and the management of risk here as well. A couple of observations for me, and again, I won't chew up the time for the sake of it. The culture advisory piece looks interesting to me because it's a very important area, and the fact that lots of people were uncertain whether their directorate took the staff survey results seriously is an alarm to me. In my last organisation, we had a staff survey. There weren't proper action plans. Nothing got better. Next time we ran a survey, the response rate dropped about 60%. what was the point of completing it? So we shoot ourselves in the foot a little if we don't take the results of these things seriously and take action where action is needed. So that's an interesting piece of work, and hopefully that'll get taken up. I know it's an advisory piece, but taken up and progressed, albeit perhaps a little bit later than it should have been. The governance one, I think, from my perspective, we know that there's a lot of change going on, a lot of transformation. Governance is even more important at that point in time. So again, the balance between the kind of paper-filling part of it, but also the making it real and using it to get us to a better place is critical. So I hope, even though that was advisory, the results from that get taken forward and fed into the developments that are in train. Thank you very much. Let's move on, unless there are any other thoughts. Okay, you can rest up for a minute. Rest up for the day. Agenda item 10 then. You've been waiting for it, and I will always put you on at the end. Sorry about that. The operational plan for 25 to 28.
I think it's the longest I've had to be quiet, Chair.
I know, it must be very difficult.
If it's okay with the Chair, could I actually do the strategy first?
Of course, and you mentioned that earlier, and I told you I'd forget. I told you I'd forget by now.
Thank you, Chair. So yeah, this presentation relates to the updated capital strategy, which is on page 297 of your packs. The strategy is being presented today for some input and feedback from the committee before going off to Cabinet for formal approval in March. The core fundamentals of the strategy have been in place since 2017, and I think they've served the Council well in its fight against fraud. Those fundamentals will remain in the reviewed and updated strategy, which are a risk-based approach, partnership and engagement, prevent, detect, pursue and deter, and innovation and modernisation. There are not too many changes to 3 of the 4, so I will just highlight the one that we're making changes in a positive light. So innovation and modernisation is a key focus moving forward. So we've heard from Matthew today about the digital teams. And if you saw in the presentation, you saw some of the governance around that. So we have stand-up meetings. I have those stand-up meetings every week. And we are trying to move into a more digital data and technology focused service going forward. So we're looking at using data to drive intelligence gathering and detection. We're looking at new technology so we can be fully paperless way out in the community. And we're looking at digital processes to support efficiencies moving forward. That was all I was going to say on the strategy, and happy to take any questions.
Thank you very much. Questions, colleagues? No, I mean, the strategy looks familiar. We can see the continuity. It's worked well today, to date. I think, we're happy to endorse that and support that. Thank you very much. Sorry? Yeah. More of the same, please, Alex and team. Which brings us then back to I've got to find it now on my screen, the operational plan for 25 to 28. Thank you.
Thanks, Chair. So yeah, next up is the capital work plan for 25-26, which is on page 279. Just before I get started, I think it's worth mentioning that this year is the first year that Claire and I planned together. And I think that makes a huge difference. We both met directors together at times. We also reviewed each other's plans before it coming to CMT and the committee. And you will actually see there are some synergies about where audit are looking first before counter fraud or getting involved. There is one piece that actually isn't in the plan because we haven't formulated everything just yet. Richard asked the question of myself a couple of weeks back regarding procurement fraud. So that will be, you will see that coming into the work plan moving forward to next year, though it's not written in the plan currently. The main body of the report hasn't changed. It gives the committee an overview strategically and operationally of the approach of the service. In Appendix A, I have refreshed the fraud risk assessment considering the past year and the landscape ahead. The risks largely remain the same. There are 27 risks that are listed out there as we continue to navigate a world that is facing a cost of living crisis. Appendix B sets out the work plan for the upcoming financial year. The plan is fully risk-based and it's focused on 3 main areas: housing, social care and revenue. The plan does look slightly different. I will explain in more detail to the committee when we get to the progress report, and that is because we are transferring low-level fraud activity and non-fraud related work back to service areas. and this presents us the opportunity to increase our work in areas of high risk. There are now bespoke projects in adult social care for the first time around direct payments and commission care, and the committee will also see a lot of the work on here is data driven moving forward. Appendix C reviewed the KPIs at the wish of the chair. One KPI is no longer in play because that piece of work is going back to the service area, and 2 of the KPIs I have increased the target against. Lastly, in discussions with Richard, we have now set the Council target for 25-26, which is going to be £8.8 million, which is a 10% increase on this year's target. And lastly, you'll see in Appendix D, I've now actually put together all the methodology about how we record our savings. And that's all for me. Happy to take any questions.
Thank you very much, and it was particularly interesting to read that through again. And quite right that you should be focusing on the more important areas of risk, and some of the stuff that we kind of did as a nice to have or on behalf of the business has gone back to its rightful owners, the lower risk stuff. Councillor Higgins.
I just think it's good joined up, working together. I think it's absolutely perfect. When you've sent them back to the lower risk ones, have you got a sort of like, I was going to say an idiot sheet, but that would be a bit unkind, but just a sort of a formula, a checklist, or a formula of how they should be doing what you're doing in an easier way?
Yeah, so the work's due to go back ready for the 1st of April. There are 3 sections in which we're looking at. All 3 at the moment are being discussed at various stand-up meetings, because we're also looking at the opportunity, can digital and intelligence actually improve the current process back into the new service area. So it's a work in progress. We are not going to obviously just wash our hands of it and say, here you go, services. We are going to share all the procedure notes, offer training support, look at the ways they may want to tailor and change the work themselves, use digital solutions, and obviously will be available in an advisory capacity moving into the new year.
Lovely, thank you very much. Councillor Burles.
Thanks. Alex, it's a good report as usual. Just a question that I've probably asked before about staffing levels. Your target's gone up. Have you got the staff to meet your targets?
I may answer that in part in the next update, but the answer to that is yes, from my perspective. But I think the committee might have some questions at the next update.
Yeah, we'll come on to that one in a minute. Very astute, Councillor Burles. Thank you. I mean, you've got an ambitious plan here, some ambitious targets. You've exceeded your targets previously. Good luck with the same sort of level of performance on the key risks, and make the savings they're needed. All right. It's not all down, but you've got a role to play. You and the team have got a role to play in this too as well. I think we'll move on then to that progress report, and we'll pick up, maybe if you can highlight the bit about resources as you talk us through. Look, Alex.
Brilliant. So, the Council progress report for Q3 starts on page 307 of your packs. Main headline is we've achieved another £2.5 million of savings in Q3, bringing the year-to-date total to just over 9 million. Some of the highlights in there is our tenancy, or our property recovery even, was another 28 properties in Q3, bringing the year-to-date to 90. I am expecting to go through the 100 mark again when we get to the annual report, which will be 2 years on the bounce, which is good news. We are still currently investigating 128 live cases at the point when we wrote this report. We're still looking at a 40-50% increase since COVID, and that has now been sustained. On top of that, in homelessness, we've closed 9 emergency accommodation units for non-occupation, saving 172,000. We've also increased our engagement work. Obviously, Q3 saw us with International Fraud Awareness Week, so we had a lot of social media that went out. But we also kicked off our awareness program in adult social care. It's been really interactive. I think to date I've seen over 100 staff members in adult social care, just to give them sort of a bit more of an awareness of fraud, sort of the risks potentially in the area, and actually learn from them as well. What do they think the operational risks are? And that's actually, it's been really, really useful to the point where we've actually got some new referrals over the last week or so in areas that I wouldn't expect. So I can't say more than that at the moment, but so that was really, really positive. Following the success of obviously winning the Public Finance Awards in 2023, because I haven't said it that much, myself and the management team decided to nominate the team for the Public Sector Fraud Awards, and I'm pleased to say that we've been shortlisted for local excellence. In addition, Laura, who is the Council Fraud Manager for Housing, has been shortlisted for Female Pioneer of the Year for her fight against tenancy fraud. The awards are on the 12th of March, so hopefully I'll have an update in the next committee. Looking forward into Q4, now we've set the strategy, or it will do once it's gone through to Cabinet. We now have a work plan to move forward. It was an opportunity to review the operating model of counter fraud and how we do things differently going into next year, particularly with the challenges the authority are facing with its finances. So obviously we need to deliver our strategic objectives, including our savings target, which has gone up 10%. The new operating model will see us improve, like I said, in data, digital and technology, and will focus on high-risk areas of fraud, with the transferring of low-level stuff back to services. So this model will lead to a small reduction in resources. It's 3 FTE. We are in consultation now. Just one of those FTE is a vacancy that we've never filled. But this will also give us an opportunity and create us some capacity to take on some of the other work and social care, etc., like I've mentioned. And also, I think it helps us ensure that we're lean, efficient, and effective as a service, so we're offering value for money. Happy to take any questions.
Thank you very much. Councillor Higgins.
Always good to go on the shop floor. Bosses in disguise are brilliant. I've always done it in my business. If I take over a business, I always go in pretending I'm not and see how it works. You learn far more. You like far more from the front line than you live anywhere else. The question is though on the properties. Once you've got them back, how fast are we turning them over to go back out again?
So that's probably more of a question for Gary Pentecost, who is in charge of voids and housing. What I do know is, we send them back to lettings. There is a process with the repairs department to get them back out. Also, if you look at the council's allocation policy, which is really important at the moment with demand-led pressures on housing, is all properties returned due to fraud are let to homeless, which is really important.
Councillor Higgins, follow on.
Through you, Joe, is that information that you can bring to us? Because I'm very concerned about it. It's all you've done the hard bit, so you got it back. So we're talking about the whole organisation. So I want to know how long it's taking to get those active again, and that it comes back.
Yeah, you want to know about so you want to know what they call the void to let process.
Yeah, exactly. So once you've given it and you found it and you've repossessed it, then what is the next stage? I mean, you can bring it.
Has it been audited at all, there, recently? If you haven't got any data, no.
It has been audited, and we didn't give it limited assurance, so it must have been okay. I know that they have KPIs around this, and I believe they were hitting their KPIs when we were auditing it. I can't remember what their KPIs are, but they definitely monitor it, and I think they have a dashboard monitoring it as well.
I will ask the question, Councillor Higgins. I'll drop you a line of what the void turnaround, the average void turnaround is.
Thank you for that. Councillor Cawthorne first. Sorry, I had a hand from before.
Thank you. Staying with housing for a minute, clearly this is a problem. It always has been, going back to my days in Cabinet. I just wonder whether there's anything in our work in identifying these cases that shines a light on perhaps some internal process issues that we could learn from to perhaps tighten up on things moving forward.
Yeah, so I think if you look at the remit of the counter fraud team, it's fraud, loss and error. So the fraud itself, I don't think there are things to do with processes. It's a lot of what we're finding the fraud is a lot of it's resident-led and obviously officer-led as well, what they're finding when they're out. Unfortunately, some of our work will highlight where actually there is an issue with the process and where something could have been recovered. That is actually ongoing and being worked on. So I've had conversations with Dan Kennedy, who's in charge of over that area, about some of the issues. We now have weekly tracker of issues we're finding, so he can get it operationally resolved, and I meet him once a month to obviously look at those issues. So there are some learning points, I think, but they are being looked at.
Thank you very much. Councillor Nelson.
This come back down again to staffing issues, because you've got here 25 bed in the sheds, unlisted properties. Obviously there is more out there, so have you got the staff to help you to do that? Because it's a big hindrance and it's a big problem for us in the borough. Bed in the sheds, people making money off of people who cannot afford, and really exploitation is taking place. So what's happening with that?
So yeah, no, I'll get where you're coming from, Councillor. So the issue, there's lots of risks around beds and sheds. So you've got the risks in terms of its condition and how it's being used, which is a private sector housing issue. You've got the planning issues on whether it was built lawfully, which is a planning issue. What's of the interest of us is whether it's rateable and whether they should be paying council tax. So our sort of focus on it is to identify those that should be paying council tax that aren't. And bringing them into the ratings list. Now, if we identify that there are potential issues that we're being told about planning, or we're being told that there are issues around conditions, then we will report them to the right service areas for them to take them forward.
Yeah, so a slightly different area of focus, isn't it?
Yeah, slightly different.
Okay. Sorry, Councillor Burners.
Yeah, just a quick one, really. Just say congratulations on the 4 prosecutions you got on the Blue Badge fraud. The other way, I see it didn't make the report, so I'll just...
Slightly out of time from the timing, yeah. So we did have some prosecutions. We've had quite a few prosecutions in different areas. We've also got a lot of criminal cases with court dates going forward. So there'll be some interesting updates in some other areas for the committees as the new year comes round.
Higgins.
Yeah, make sure that goes in Hillingdon people, though, yeah?
And not to overlook the more substantial savings through the higher risk areas of work as well. So congratulations to you and the team. I'm slightly concerned about the resource. Cutting a winning team that does provide so much value back, the headline, if there were one, wouldn't look good. But I understand that every service has to step up and look for efficiency and savings where possible. Confident it won't have a detrimental effect to excess on performance?
No, not at all. I think, there's a lot now talking about target operating models, etc., moving forward, and how services should be ran. We've done that on kind of a local level with this. So I believe that this is the most efficient, effective and value for money service we can offer our residents moving forward and still deliver, which is the key.
Yeah, it wouldn't be good if it's kind of one step back. Appreciate savings need to be made. If I don't know how much more you could cut if that request ever came, but I don't think it should be much if the request ever comes. Councillor Higgins.
It's a very good point, Chair. I just think that don't be afraid to ask for it. I know they might be forcing you to cut, but you're saving so much money for the council, so it's invest to save as far as I'm concerned. And I just think that we need to be doing more of that, rather than be so, it's penny-wise. I think the word's penny-wise, and rather than actually, if your service is running it and you need the staff to do it, and you're going to get us more revenue, I mean, no one thought, let's be honest, when we started this off, that you'd be getting the sort of type of figures that we've got through. And I would thought that, in my view, is that I would be saying, right, what do you need? I'll give you more to get more done, because it saves the council so much money in the long run. So that's my view. So.
Yeah, no, I think, I'm really comfortable where we are and what we're going to be able to achieve and deliver. I'd completely take your point, Councillor Higgins. I wouldn't be afraid. I would have those conversations with Richard, obviously, if I thought that there was opportunities to invest to save moving forward. I'm really comfortable with this structure and the operating model going forward. I think, the key is there's a trade-off, isn't there, with the number of staff you have and the return on investment per head, effectively. And I think we have an effective model for that moving forward. If that changes, then of course I'll have those conversations with Richard moving forward.
Thank you very much. Well done to you and the team. Well done to you and the audit team as well, Claire. I think we'll bring that conversation to a close. Agenda item 13, future work programme. Anything there, Ryan?
Just on the next round of training, we've got a provisional date now, the 20th of March, if that works for everyone. For the next member training session. Does that not work?
20th of March.
Provisionally, that's not.
Provisionally. So if it doesn't work, let Ryan know. If it does work, let him know. And
yeah.
Yeah, we're clear.
Okay. If there's nothing else, thank you. I apologise for it running beyond the normal duration. Thank you all for all the paper and all the hard work. Nice to see you, Tony. Thank you, committee members. Thank you very much, Ryan. And that's the meeting come to a close.